Okay, that works. Down here. Okay, that works. That's working. That's working. What's happening? Some of that shit I'd like to see. Some weird ass shit going on, you see. All right. Good evening to you. Good evening, and how do you do? Tra-la-la. Come on. There we go. Okay. Home. Join. No. Cancel. Team chat. Cancel. Home. Meetings. Mail, whiteboard, tasks, blah, blah, blah. Docs, calendar. Unable to unstable network. What the hell does that mean? Unstable network. I have no idea what I know what it means, but what the hell does it mean? Now, what the hell does that mean? Okay, that's not right. That's home. There we go. Okay. My profile, display name, blah, blah, blah. Copy my direct link, chat link. What the fuck does that mean? All right, that's not working. That's not working. This is home. That's not working. What the hell is going on? Cancel. All right, I have no idea what's going on with that one. Just ain't going to happen, is it? All right, what do we have over here? Let's see who's in the house today. Now, I feel bad over here because it's just not freaking working. That I don't need. There it is. 9 p.m. Now we get it's working. Okay, turn that one on. And turn that one on. Now that's working. That works. All right. I think that's it. I do. I think we be ready. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. So grateful to be here. For the next 1 or 2 weeks, watch list, ADP, okay. ProX, dividend date, okay. American Express, lovely. Thank you there, Mr. Steve. Michael, Corey, Doc, what are you doing over here? All right. So, who else do we have this evening? Let's see. We got David, GFG, Good Little Fish. Okay, Good Little Fish. All right. Jen, how are you doing today? Online Profits, good evening. Who do we have over here? Over here we have Joined. It's an interesting name. Many 69, a little disturbing, but okay. Dan, Michelle, Sonny, William, Joshua, Dozer, David, Renard, good evening. Freckled Queen, good evening. Whiskey Drinker. Okay, there's no confusion what you do on a Friday night. Just saying. Evil Sechi, Rick, Enza, good evening, Enza. Jesse, Todd, Mo, McKeel, Right First, Mark, Jay, Enza, good evening. Jen, Koopa Loop. Okay, Jen, good evening, Jen. Start Fresh. William Decker. All right. J-Mass. I've got the perfect stock. Oh my goodness. All right, let's check it out. IFC.to. I'm total lost on that one. Let's check it out. See if I get it right. IFC.to. Why do I think this is not going to show up? Because it's not a U.S. stock. Why is that? Okay, we cannot find this symbol. So apparently, I have no idea what IFC.to is. Now, the TSE, that's not the U.S. stock market. So why are we looking at that? 20-year increasing dividend. Yay, fits. How can you tell if a stock gives dividends? It will be on the list. Now, fits, take a look at this. Dividend Kings. That's all companies have 5 decades of dividends, increasing dividends. List 2, Dividend Aristocrats. We got 25 years of increased dividends. Dividend Champions, 25 years of increased dividends. Dividend Contenders, 10 to 24 years increased dividends. That's how you tell if they have dividends, because they're on one of those dividend lists. All right. Kiki. Interesting name, Kiki. Scott Hackler. GBY. What the hell is GBY? Grand Bank Yachts. Well, apparently Grand Bank Yachts doesn't have a ticker symbol. Or that's the wrong one. Niculator, how are you today? JKB Products. G Evening. All right. William Decker, thank you that. The Golden Buzzer. Ding, 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 ding. IFCZZ. ZF. All right. IFC ZF. Intac International Finance Corporation. There are no options on that stock. Why are we looking at it? Oh, Bill Walker thinks options is gambling. Well, I'm not going to agree with you, but, if that's what you think, Bill, I honestly don't know what to tell you. Think of it this way, Bill. I don't buy options, I sell options. Now, the reason I sell options, let's give me a quick little scenario here. All right, right at this moment in time, Mr. Bill, AT&T just so happens to be at $28.80. That's the current price, $28.80. Now, let's say, hypothetically speaking, I buy it and I own it at $28.80. Okay, good for me. Now, also, let's think of this. What if I want to sell it to someone else at a certain price by a certain date? Okay, hold on. Let's say, hypothetically speaking, I already own it and I want to sell it to someone else. And I want to sell it to them at a certain price by a certain date. Let's say the end of the month. Okay, the end of the month would be the 27th of February. Okay, so let's take a look at what is available in options that will allow me to be safe, to get a predictable income, and to give me a little bit of extra cash. So if I buy it tomorrow morning at $28.80 and I want to sell it by the end of the month for, let's say, $29, 10 cents? No, I'm making more than the 10 cents, Mr. Bill. Okay? The 29 is going for 47 cents per share. So, hypothetically speaking, I could buy it tomorrow morning, $28.80, sell it for $29 to someone through what is called a covered call. That means I'm secured. I don't lose anything. They're secured. I'm not going to sell it to someone else. Now, they're betting that the stock goes up. Me, I really don't care which way it goes. I'm just looking for income. So, that being said, oops. Matthew, give me a second. I'll take a look at that. All right? Sit tight. So, that being said, all right, I can turn around and pick up a 47-cent profit, which means, yeah, I bought it at $28.80. I'm selling it at $29. I collect a 49-cent profit just to give someone the right to sell me. Wait a minute, it's highly uncertain short-term price movements with massive leverage. Yeah, but Bill, I'm not buying options, I am selling options. Okay, I'm basically just giving somebody else the right to buy it from me at a certain price by a certain date. I'm not the one doing the gambling. The person who's buying the option is doing the gambling. I'm playing the house, which means I already own the stock. I'm just selling it to someone else at a predetermined price at a predetermined date. And I'm able to collect what's called a premium, which is right there. Now, a 48 cents, or what is it, 48? No, it's 47-cent premium on a $29 stock. Well, that's a 2% profit for 1 week. So what if the price goes down? You're only explaining your winning scenario. Bill, you're absolutely 100% correct. But I don't buy just any companies. I only buy those companies that have consistently increasing profits, which would be the Dividend Kings, 5 decades of increasing profits. That means for the last half a century, every single year, without skipping a year, every single year, the profits get higher and higher and higher and higher. Okay? There are 10,899 stocks as of Monday, because they add some every single week. So we got 10,899 different companies. Why is it that only 300 of them are consistently profitable year after year after year after year? That's all I'm looking for, Bill. So if the stock goes down, let's say, same company, okay, I buy it at $28.80. Let's say it drops down to 20. Or let's say it drops down to 10, more than a 50% drop. Am I still eligible for the dividend that just so happens to increase every single year? Also, if I buy 1,000 shares of AT&T at $28.80, I own 10,000 shares, which would allow me to sell 10 contracts. So whether the contracts, close that, okay, 10 contracts allows me to sell in the money, at the money, or out of the money. So regardless of the stock going up or down, if it goes down, I still have the rights to sell call options against my position. So even if the stock goes down, I can still write call options against it and still have cash flow coming in. Now, the risk there would be if you're not paying attention, the stock could bounce and go right past your strike price, and you might get exercised out of the money. Okay, well, that would be an opportunity to lose. But that would be my own damn fault for not paying attention. Okay, you should never do something you don't understand. And if you do lower the strike price of a stock, if you do lower the strike price with one of your options, if the stock drops, and if you don't pay attention and you don't set any alerts saying, hey, the stock is bouncing, you need to take a look and you need to do something. Well, that's your own damn fault. Okay, we're all adults here. Let's not play stupid. Okay, number one, the stock market is a place where people come to make a profit. We're not here for the fun of it. We actually want to make money with the money that we have. So the only strategy I'm showing here, Mr. Bill, is simple, safe, predictable, consistent 1% per week. A trading strategy that was created for a 9-year-old. And it's pretty damn simple. Okay, number one, never pick a stock you do not want to own long term. That means you got to be okay with it dropping in price or jumping in price. Because stocks only do two things. They go up or they go down. That's it. They don't come to the house and take the dog for a walk. They don't make you dinner and they don't make the bed. Okay? They go up, they go down, that's it. So if you're concerned with the stock going down, don't sell a covered call for less than what you paid for it if that's your concern. Or just sell the covered call for the price that you're in at it. If you don't want to lower the strike price, don't. Okay, you don't have to do anything if you don't want to do it. I'm just saying the opportunity is there. So if I did buy it at $28.80 and it does drop down to $20, I still can sell out of the money strike and get 0.5% and still be safe, because 3 strikes out of the money is still giving me 0.5%. Now 0.5% is still 26% at the end of the year if you get 0.5% every single week. So pick a good stock. Make sure you understand it. Make sure you're okay with owning it long term, even if it goes down. And better yet, make sure the stock is consistently profitable, meaning it gives you more and more money year after year after year. Dividend king, dividend aristocrat, dividend champion, dividend contender, anything on Warren Buffett's list, sure, why not? My thoughts on Robinhood long term. Well, Robinhood doesn't have any dividends, so it's really not on my list. But if you like it, hey, you got to remember that we're all different and we're all looking for something different. I'm looking for cash flow. I'm not looking for capital appreciation. And just to let you know, Mr. Bill, I wouldn't be buying AT&T, not at the high of the year. That just doesn't happen. Not for me anyway. I don't try to pick the highs and I don't try to pick the lows. I have a very strategic strategy created for a 9-year-old. And it's not anything special and it's not anything crazy. Number one, never buy something you don't want to own. Well, that's just logical. Number two, don't sell at a loss. I mean, come on, really? Number three, make sure the company's consistently profitable. This one boggles my mind. Yes, Mr. Bill, you'd be surprised at how many companies are not profitable that people put their money into. Just doesn't make any sense. Number four, weekly options only. If it doesn't have a weekly option, I don't want to look at it. Now, I will look at anything you want to look at. You want me to look at Robinhood? Fine. I'll look at it, but I won't trade it because it's not consistently profitable and it doesn't have increasing dividends. So, just like the other 10,899 companies, if it doesn't fit what I'm looking for, next. Okay, I'm only looking at 300. That's it. 300 companies is all I'm interested in until... Well, that was lovely. Until the company has 2 decades, that's 20 years, in case you didn't know, 2 decades of consistent increasing profits, I have no desire to look at it. I'll look at it and show you. Uber, hell no. Okay? Hood, hell no. Okay? JEPQ, hell no. SCHD, hell no. NVIDIA, double hell no. I'm strictly a numbers kind of guy. If the company's profitable, great. Show me the numbers. Do they pay dividends? Great. How long have they consistently increased their dividends? Because the dividend is a portion of the company's profits. And if the company makes more money year after year after year, well, the dividends increase year after year after year. Those are the only ones I want to look at. It just doesn't make sense to me any other way. So who else do we have here tonight? All right, who do we got? We got Steel and Plays. Good evening. What the hell are you doing? I am teaching dividend investing for weekly cash flow. Simple, safe, predictable, consistent, 1% per week. That's what we're doing here. What else we got? That's a green screen. Oh, hell no, it ain't a green screen. Check this out. How can you say that's a green screen? Look at that. That's not a green screen. That's live, brother. Live. It's called a vibe board. V-I-B-E. Okay, I can take whatever I want. Let me see if I can do this. Sit tight. Watch this. Let's do this right here. Great, right there. Check this out. You're going to love this. Right there. Oh, hold on. Check it out. Here it comes. There it is. Where is it? Where is it? Where is it? Come on. There it is. Right there. There you go. No, it's not a green screen. Okay? It is live, and I'm showing you exactly what it is. Okay, let's go out of that. Okay. Whoops. I forgot what we did with this one last night. Oh, that ain't it. Damn it. Let it reboot. I hate it when it does that. Okay. Next, what other questions do we have? Got that one, Steele? It's not a green screen, it's live. All right, hold on a second. Hold on. Just hold on a minute before we go much further. Rick wants to take a look at Chevron. All right, we'll take a look at Chevron. Wait a minute, what do we have over here? YouTube Live, we only see your desktop background. Oh, check that out. Display. All right, give me a second. Let's see if we can fix that. Let's try it one more time. All right, display capture. There we go. There we go. And there we go. There we go. And there we go. And all right. There it is. All right. So that should do it. Get that out of there. Okay. Does that work better? Check this out. Capital One Finance and Abelmau. Ooh, Mike, let's check it out. All right. So let's see what else Mr. Bill has to say, considering he doesn't agree with what we're doing. Oh, la, 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 la. All right. Okay, so Bill Last says, okay, so what if the price goes down? Yep, we already talked about that. Okay, Bitu, Uber has not been around 20 years yet. Simple life hacks, QQQs, dude, have you even looked at the numbers with the Qs? No, seriously, the Qs, let's go back and take a look. Because some strange reason, somebody thinks the Qs is a great idea. All right, so let's put the Qs in here. Okay, wait, one, QQQI, QQQI. All right, give it a second, let it pop up. Okay, here it is. Okay, QQQI. Now, what we're doing at this moment in time, we're going to Yahoo Finance because I use Thinkorswim for my trading, which is through Charles Schwab. Now, Thinkorswim doesn't have everything I'm looking for. It doesn't have historical performance, and it doesn't tell me what the details are of the company. So if you're going to do this, you need to have access to a financial website so you can have a deeper dive into the numbers and make an educated decision on what you want to pick. So let's take a look at the dividends for QQQI. What am I looking for specifically? I'm looking for 2 decades of increased profits. That means higher, 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 higher. Every single year, more money, more money, more money, more money. Let's find out. Let's go back to 2006. Got a minor problem here. Minor problem. Okay? Simply life hacks. Check this out. The very first dividend they paid February 21st, 2024. 59 cents. This thing's not even 2 years old yet. Wait a minute. Wait. February 2024, February 2025. Okay, so it's just over 2 years old. That's it. Just over, not even 2 years old, because the 21st of February was the very first dividend. But for the 2 years, let's see how the Qs look. I'm going to say no because I don't buy anything that has only 2 years of information for it. But let's take a look. Now, 59 to 60, that's higher. That's lower. Higher, higher, lower. Higher, lower. Higher, 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 lower, lower. You see the problem we have here? That is not consistently profitable. Okay? The dividends go up, the dividends go down. Dividends go up, dividends go down. That's not consistently profitable. That's profitable once in a while. Yeah, no thank you. So simple life hacks, I'm going to say no to QQQI. I say no to all the Qs because not a single one has been consistently profitable for 2 decades. You want to know what consistency of profitability looks like? Look at that. Watch this. Hold on. Give me a good second. All right, here we go. This one. You'll love this one. All right. There it is. Let's go 20 years. Okay, 20 years ago, 2006. Right here. Are we ready? Check this out. 2006. We're going to look at 2006, 2007, 2008. You ready? Here we go. 2006, 33. 2007, 36. 2008, 39. 2009, 40. 41. 45. 49. 53, 57. 61, 65, 67, 72, 76, 79, 81, 89, 95, $1, $1.03. Okay, that's it. Did you notice? Every single year, the dividend was higher and higher and higher than the previous year. That is consistently profitable. Making more money this year than they did last year. Making more money last year than they did the year before. That is a dividend king, dividend aristocrat, dividend champion, dividend contender. Okay? How often has the company increased their profits that they give back to the investors? You got 2 choices. Okay? I love the fact that, you got 2 choices. That's it. It's either a capital growth stock, where the company just puts all the profits back into the company for future growth, or a cash producing, or what they call it, income. It's either a growth stock or an income stock. That's it. There's no in between. It's a growth stock or an income stock, one or the other. And then another thing you have no choice over. Okay? When you get 62 or 65 or wherever you retire, whatever year, you get 2 choices. Choice number 1. Learn to do it yourself. Take responsibility for your own money. Accountability is what they called. Choice number 2. Give it to someone else, let them do it for you. That's it. Do it yourself or have someone else do it for you. There is no third choice. Anyway, it's kind of funny that you think of it that way, because basically 2 choices in everything. Up, down, left, right, hot, cold, what do you call it? Cash producing assets, cash draining assets. It's either one or the other. Anyway, let's keep on going. What else do we have? All right. Skate Dad. How's it going, Skate Dad? Bill Walker. Okay, another little tidbit from Mr. Bill. I guess I'm more of a high return dividend. With price increase, options can lose you a ton of money. Now, Bill, I'm going to agree with you for a smidge. Okay? If you don't know what you're doing with options, you shouldn't be doing options. That's pretty clear. Okay? You should never do something you don't understand. But, Bill, it depends on how you're using the option and what it is you're looking for. Okay, so you're looking for a high return dividend. Well, let me ask you this, Mr. Bill. Is your dividend that you're looking for giving you a consistent 50% per year? I'm just curious, because I'm looking for 1% every week. And we all know from elementary school, what is it, 2nd grade, 3rd grade, we learned this, that there's 52 weeks in the year, 1% every single week is going to come to 50% at the end of the year. That just makes sense. Alex, you're trying to understand. Okay, here we go, Alex. The trading strategy you're watching was created for a 9-year-old. And hold on a second, because we haven't done this in a while, so some of you just don't know who the little princess is. All right, so let's do this. Oh, wow. It's a new computer, so it's not set there. Okay. Is that it? There it is right there. Okay, the 10-minute trader. Okay, that's my website. If you do some research on it, you'll see that it's been there for over close to 20 years. All right, what I wanted to show you is right here, my trades for 2024. Well, that brings you to all the, what do you call that stuff? Social media. Instagram, Twitter, books by James. Yes, I've written 15 books. TikTok, podcast, YouTube, Facebook, LinkedIn, blah, 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 blah. We're going to go to YouTube, introduce you to the little princess and where it all came from. 9 years old. Okay. We're looking for videos. Oldest videos. And there she is right there.
Hi, I'm Jake, and as you being part of my internet website club thingy, which my dad didn't let me call it that, but I do.
Hold on.
Being part of that, you're going to be getting weekly lists of stocks that I'll be trading.
As me, 16 years ago.
There's 21 days in the month of March. That means every single day you can buy.
Hold on, my favorite part's coming up. Watch this, watch this.
Dividends.
All right, now, the reason I show you that is to show you how long ago we've been doing this. That was 16 years ago. Look at all the hair I had back then. And yeah, my daughter was 11 in that picture. She asked me when she was 9, Daddy, what are you doing? Can you teach me? Now, out of everything you expect to hear from a little 9-year-old girl, can you teach me? Well, yeah, that's something normal. But we're talking about investing in the stock market, and she wanted to learn. Now, the other kids, they want nothing to do with it, but she wanted to learn. Okay, great. So how do you teach a 9-year-old? Well, it had to be simple, had to be safe, predictable, consistent, no way to lose. That's the 5 criteria I had to figure out for a 9-year-old. Okay, fine. Number 1, never buy something you don't want to hold on to. You don't understand it, don't buy it. Number 2, never sell at a loss. It defeats the purpose of the game. And don't kid yourself, this is a game. It's an adult game and it has adult consequences. Just like Monopoly. 4 greenhouses, 1 red hotel, round and round you go. Stop on go, pick up some dough. You know, that type of scenario. Number 3, make sure the company's consistently profitable. That means take a look at the numbers. Is the dividends increasing? What's the earnings per share? Is the earnings per share increasing, decreasing? What's the revenue coming in? There's a whole bunch of interesting information you find out, and that has to do with, what do you call that? Fundamentals. And then, rule 4, weekly options only. Now, I already told you I want weekly cash flow. That's what I'm looking for. There's only 2 ways to get weekly cash flow. Find something that trades on a weekly basis, weekly options, or sit in front of the computer looking at this stupid thing all day long. Okay, looking at this every day. Yeah, no thank you. All right, so Alex, I'm terribly sorry you don't understand it. Okay, number 1, never buy something you don't understand. That's number 1. Number 2, never sell at a loss. Number 3, only pick good companies that are consistently profitable. Number 4, weekly options. You're just going to buy the stock at one price, sell it for the exact same price, and collect the premium. Only if the premium is more than 1%, and only if the stock is going upwards. Not at the high. Okay? I don't buy at the high. Wait for a good opening for an opportunity. Sit tight, Alex. Okay? As the night progresses, you will see how everything unfolds, and then it will make sense. Let's keep on going. All right, David. Thank you for that, David. Draco Malfoy. Holy Charlie. Now, Draco Malfoy, I will take a look at SoFi for you. And I also tell you I don't do SoFi because SoFi has no dividends. Okay, they take all their money and they put it back into the company for future growth. So it's a growth stock. It's not a dividend stock. Okay, it might be a dividend stock, but it's not a, what do you call it? It's not a cash flow, not an income stock. That's the word I was looking for. It's not an income stock. It's a growth stock. So here's your high. Here's your low. Here's where it was. Here's where it is. Look at this. Down, up, down. Yeah. No, thank you. What I would do, if you really liked it, wait for the bottom to show up. Here's the 30-day high. New bottom right there. Okay, now don't get me wrong. You make most money buying low and selling high. But we don't know where the bottom is because tomorrow it could go lower. Now, I don't jump into anything until I find the bottom and turns around and then goes back up again. That's what I'm looking for. So if I wanted SoFi, I'd wait for a bottom for it to turn around and go back up before I think about it, which might be, if it bottoms out tomorrow, Tuesday, Wednesday would be the earliest I would get into it because I like 2 days of the upside. On the third day, I would like to jump in. Time slot freight. Who's giving 5% dividends? You have any idea who gives out 5% dividends? Sit tight for a second. You got to see this. You're going to like this. Hold on. All right. Whoops. There it is right there. Okay. Time slot freight. Sit tight. I'm going to show you something. You're going to love it. You're going to love it. You are. Now, what we're looking at this moment in time is called FinViz, Financial Visualizations. It's a website. A lot of it's free to use. You want to see who's paying out 5% dividend? Check this out. Dividend yield. Right there. But before we go to the dividend yield, check this out. 10,000. Holy cow, I was wrong. Check this out. 10,929 companies this week. The number changes every day. They're always adding new companies. So as of today, 10,929. I still only want 300. Okay, who pays out more than 5%? Right there, dividend yield. Let's click on that. All right, now, no dividend, positive, high dividend, anything over 5%. Let's do that one right there. Okay? Anything over 5%. How many companies are offering over 5%? All right, you ready? 1,483. Time slot freight. Did you hear that? How many companies pay over a 5% dividend? 1,483. That's it. You want to know who pays high dividends? There you go. What do we have here? Alternative Access First Priority Sale Bond ETF. Okay. Round Hill Apple Weekly Pay ETF. Curve Yield Premium Strategy Apple ETF. American Assets Trust. Alliance Bernstein Holdings. Blah, 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 blah. 1,500 companies are paying over 5%. You want 5%? More power to you. I want 1% every single week. 1% every week is more than 50% per year. That's what I'm looking for. Okay? Draco Malfoy, we already said no to that. Bill Walker. Ooh, coming in with NGG. What the hell is that? That's not a good sign, Mr. Bill, if I have to say what the hell is that. NGG. National Grid PLC. Okay, whatever. Hell no. 2 reasons. You ready, Bill? No. I don't buy at the high of the year. Where's the opportunity? Seriously. It's a serious question. Where is the opportunity for a stock that's at an all-time high? Yeah, no, thank you. Second reason it's a no, Mr. Bill, is because it's February, March, May, June, September, November, December. That is what's called a monthly optionable stock, which means I can only trade monthly once a month. So monthly, yeah, I get 1 or 2% for each trade that I do. Wonderful. Monthly, I'm making 12 to 24% at the end of the year. Now, some of you might like that idea. But, Mr. Bill, if we do weekly, you got to understand, Bill, I'm retired. I got nothing else to do. This is kind of like my entertainment. I'm enjoying myself doing this. All right? So I come on every night and I share what I know, and I try to help people out with a 1% trading strategy. Okay, so weekly, 1 to 2% with each trade that I do. Weekly, Mr. Bill, that is 50% to 100% at the end of the year. So I don't do monthlies because they just don't work for me. Now, the reason I say I don't want monthlies, because we got 8 days until the option expires for February. Well, the next option is 36 days. Now, it's hard enough to figure out where a stock's going to be from Monday to Friday, hence the weekly options, because we do all our buying and selling on Monday. And Friday, we usually like to be out. That's 5 days. Now, it's not as difficult to figure out where it's going to be in 5 days, but 30 days, 36 days, 92 days, yeah, no thank you. A lot can happen in 92 days. Look at this. Okay, just for the fun of it. 30 days ago, we're at 80. We dropped down to 77, shoot up to 81, drop down to 79, shoot up to 85, drop down to 84, shoot up to 89, drop down to 86, and shoot up to 92. Great. Now that's 30 days. That's what happened in 30 days. That's 30 days. Now tell me where it's going to be in the next 30 days. Yeah, I didn't think so either. I don't do monthlies because it's very challenging to figure out where it's going to be in 30 days. Not only that, the premiums that they give you are usually not 4, 5, or 6%, because 1% every single week, well, monthly, it would have to be 5 or 6% every month. And it's very challenging to figure out where it's going to be. So no, I don't do monthlies. Sorry, Mr. Bill. Oh my God, FL Hockey, brother, you're back again. Woohoo! Alex, I would like weekly dividends. Okay, so there are a few companies that offer weekly dividends. Okay, I really don't do those, but I do weekly options. There is a big difference. IMAS 26, John Deere. Ooh, yes, it is a dividend king. DE is John Deere, and that's going to be a no. Okay, it takes me 3 to 4 seconds to size up a chart. 3 to 4 seconds. Let me show you what I'm looking for. 5 things. And it should take you 3 to 4 seconds also, because it's not that difficult. Are you ready? Here we go. High, low, where was it? Where is it? Up, down, up. Okay. Down, up, up. That's it. 3 to 4 seconds. High, low, is, down, up. That's it. And it's a no. The reason it's a no, I don't buy anything at the high of the year. I don't care who it is. There's no opportunity from there. High is when you sell for a profit. Low is where you start buying. Okay? It goes up, it goes down. When it turns and goes up, that's the time to buy. In my opinion. That's my opinion, my strategy. You guys can take my strategy and tweak it if you like. Add your own little twists to it. Whatever makes sense to you. For me, a good quality company that pays a dividend every single week. Not dividend, sorry. It has a weekly option. All right. Can you look at Archer? Okay, ACHR. ACHR. Oops. Archer. Interesting. Now, Archer may or may not be on my list. I'm not 100% sure because it's not something I normally do. But look what happened. Okay, the high, the low. Where was it? Where is it? Look at this. Down, up, down, up, down. So it's going down at the moment. Not something I want to jump into. However, if we zoom in, take a look. 30-day high, 30-day bottom. She went up 2 days, but she didn't go a third day. She's starting to come down now. Okay, next. Draco, we already did SoFi. Buckeye Fever, Tesla, TSLA. Now, I don't normally do Tesla, and the reason I don't do Tesla is they don't have dividends. So we're going to change our strategy with Tesla to look at historical predictable movements. And for that, we use a seasonality chart, because the seasonality chart shows us what the stock does normally year after year after year. And let me show you this real quick, okay? The chart we're looking at now is called the seasonality chart. Blue line, red line. The blue line represents the movement this year. The red line represents the movement on average 10 years. What has this stock done on average for the last 10 years? We'll take a look at the first quarter. Starts out nice in January, and by March, it's at the bottom of the year. Tesla's at the bottom of the year in March. So why would I be buying it now if it normally goes down in March? And then look at this. The end of March, she shoots up. Then she goes sideways. And then in June, a nice slowly up move. Then in July, sideways. September, big jump, pull back, big jump, pull back, back up again. That's historical performance. It's not guaranteed, but it gives us a good idea. What does the stock normally do year after year after year? Now, I have mine set up for 10 years. You can set yours up for 20 years. You can set it up for 3 years. You can set it up for 5 years. I like 10 years because 10 years, it's not too far in the past, so it gives me enough data to give me an idea where do I think it's going to go. So normally I don't do Tesla. All right, Buckeye? Because Tesla doesn't have any dividends. And the reason why I'm looking for dividends, okay, all right. The reason I like dividends, check this out. This is an EX dividend calendar. Okay, the month of February. We are here on the 12th. Okay, all these little tiny green dots represents companies that pay out a dividend. Now, do I like each and every one of those? No. I like these ones right here. Now, these little green dots represents companies that have been consistently profitable for 2 decades. That's 25 years. Wait a minute. No. Quarter of a century, 25 years. So each one, let me name some of them, see if you know who some of these are. Granger, IBM, Target, K-View, ExxonMobil, 3M, Schmuckers, Emerson, PPG, Dover, Consolidated Edison, Aflac, Archer Daniel Midland, Johnson & Johnson. Come on, you've heard of mostly all of those companies. I have no problem buying any one of those, because they're consistently profitable and they have weekly options. Okay. Next, what do we got next? Tech sector got smashed. Tony, don't know, don't care. Okay, I only do companies that are over 20 years old and have consistent profits. Looks teal to me. Okay, looks teal, but it's actually little green dots. You can change the colors if you want. What else do we have? Be more for you. Bear trap. Okay. Uh-oh. What do we got? Hold on a minute. All right. Hold on. SoFi. We already said no to SoFi. Solid information. Thank you there, B4. Uh-oh. Where are we, TQ? Oh, wow. I missed all these questions. All right. I'm going to grab a seat so I can get comfortable and read some of these questions. All right. Now, for those of you putting questions in the chat, I'm going to apologize now. We have 9, count them, 9 different platforms. We have 8 different cameras, okay? So the 8 different cameras have screens on them, which means I get questions. So if I don't get to your question as soon as you put it up, give me a little bit of slack. We'll get to it. All right, Steele, we saw you. Cash draining asset. Mike, thank you for that. That's a funny one, Mike. I don't think she's going to like hearing that, though. All right, what do we have over here? James on YouTube. Yep, we already fixed that one. Hopefully you fixed that problem. All good. Yep, thank you. Okay, we will check out Capital One Finance and Able Mile. Give me a second. Let me answer some of these questions first. All righty. I'm trying to understand. All right, we'll see if we can do that. SoFi, we already did that one. We already did that one. Alex, I would like, okay, got that one. We already looked at John Deere, NGG, we looked at. Tech sector, we looked at that one. Looks teal to me, got that one. All right, just got my Apple dividend, I reinvest. Okay, nothing wrong with that at all. Nuzzy, are dividends taxed? Depends on how your account is being held. Okay, if you're holding it in your personal name, you're going to be taxed the absolute highest there is. And man, ATH. What the heck is ATH? I mean, you guys put stuff up and expect me to know everything. There's like 11,000 different companies. How the hell am I going to know all of them? I have no desire to know all of them. I only like the ones that are consistently profitable. That's it. All right, so what did we say? ATH? What the hell is ATH? ATH. No options, no thank you. Sorry, Inman. Hey, be more. No. American Dissident. Okay. Yes, they are taxed. Be more for you. Okay, got it. Thank you. Yes, they are taxed. It's an income. Yep, but it depends on how you have it held. If you have it held in a corporation, then you get taxed at corporate levels. If you have it into an endowment, it's not taxed at all. Okay, all depends on how you have it held. David, are you kidding me? Energy transfer, ET? Hell no. I don't like energy transfer for this plain, simple reason is that the premiums are horrible. Okay? Take a look. At the money right now, 1826. Well, the 1850s are going for 19. There's your 1%. Great. One strike out of the money, it drops from 19 down to 6, which is not even 0.5%. But then it goes to 0, 0, 0, 0. I don't like the ones with a bunch of zeros because when, it's not an if the stock goes down, it's when the stock, because they all go down. Okay, don't think you're going to buy something and it's not going to have a chance of going down. They all do. Los Mocalejets Restaurant. Hello, what do you recommend for the highest dividend stock to hold? You definitely got to go someplace else. That's not the game that I play. I don't buy and hold anything. Everything that I invest in, every single thing, gives me a weekly cash flow from it. Everything. Okay, so for me, there is no such thing as long term. My idea of long term is 30 days. That's it, 30 days, 1 month. Okay, because I live my life 1 day at a time, 1 week at a time. All right. Let's add some more questions. What do we got? Nazi. Raja Hill, what was the ticker symbol? ET, energy transfer. Michael, how you doing? Sailing newbie, how are you? Juliet, be more. Mag 7, give a high dividend, but they lose money. Be careful. Yep, I wouldn't do the Mag 7. They're not all. They don't all pay dividends. Which stock gives you 50%? Vish, how are you doing today? Now, Vish, I never said anything gives 50%. What I said is I invest in good quality dividend stocks that allows me to do a weekly option that will give me 1% per week. And 1% per week equals over 50%. James, how is it sustainable for a company to give 1% weekly ROI? See, James, you weren't listening either. Okay, stocks go up, stocks go down. Okay, as it's going up, I want to jump in, do a covered call, grab 1%, and then get the hell out before it goes down. Because let's zoom into this for a second here, Mr. James. Okay, check this out, Mr. James. Are you ready? Up, down, up, down, up, down. Up, down, up, down, up, down, up, down, up, down. That's all stocks do. What your job is, if this interests you, is find good quality companies. I only do 300. That's it. Okay, I don't look at all the other ones because they don't fit what I'm looking for. And what am I looking for? I'm looking for consistency. I'm looking for predictability. I'm looking for profitability, and I'm looking for safety. So when I choose a stock, I get 2 criteria and only 2. That's it. There's 10,939 different companies out there. Let's call it 11,000. There's 11,000 companies out there. I'm only looking at 3 of them because 300. Because only 300 fit what I'm looking for. Ready? Just 2. That's it. 2. You ready? Consistency of profitability. That's 2 decades of profits. Okay, now don't give me the crap 20 years is too much to look for. Stock market's been around for over 400 years. 400 years. If you can't find a company that has 2 decades of profits, you're just not serious enough. Because I already gave you the lists. Dividend Kings, 5 decades of profits. Dividend Aristocrats, 25 years of increased profits. Dividend Champions, 25 years of increased profits. Dividend Contenders, 10 years to 24 years increased profits. And if you like old Wally, just use what is on his list. No, that wasn't his name. What was his name? Holy cow. Uh-oh. Buffett. Sorry. Buffett. Okay, so those 5 lists I just gave you contain 300 companies that actually fit what I'm looking for. And you can go to Google and put in the Google search, Dividend Kings List 2026. Now, this is not my list. I didn't create it. Somebody else did. I'm just using someone else's information. They do it for us. They look at all the companies in the stock market and they figure out who has been consistently profitable year after year after year. And they do it every single year. And if you miss even one dividend payment or one dividend payment goes down, you get kicked off the list. And trust me, it takes a long time to become a dividend king. 5 decades. And if you have 6 or 7 decades of increased profits, well, hell yeah, you're on my list now. Those are the companies I want to do. All right, what else do we got? Tell me something good. What do we got? Tell me that you like it, yeah. All right, Capital One Finance. Over in the peanut gallery, we got Capital One Finance. Now, I love Capital One Finance. It's on my list. Here we go. Here's the high, the low. Where was it? Where is it? Look at this. Down, up, down. Yeah, no. Now, don't get me wrong. I love Capital One Finance. But here's the thing. It's not a no, I would never do it. It's just no for this week. Let me zoom in and show you what I'm looking for. Okay? 30-day high was 30 days ago. 30-day bottom, that was today. So with the 30-day bottom being today, that means I'm going to be watching this thing tomorrow. I'm going to be watching it Monday, and I'm going to be watching it Tuesday. Why? Because 30-day top, 30-day bottom, what happens? Usually, now this is not guaranteed, this is just usually. Usually they will find the bottom, and then people will start jumping in. And when they do, stocks go up. But I won't jump in until the move already starts, which means tomorrow, if she's higher, that's just 1 day to the upside. Okay, Monday she might be even higher. That's 2 days. Now, 2 days to the upside, I'm looking for the 3rd day, which might be Tuesday. Then I would jump in. 3 days. 2 days to the upside. On the 3rd day, if she continues going up, that's where I jump in. Then I buy it for whatever the price is, and I sell the absolute closest, safest stock option. So right now, 206.89, I'd be looking at the 207s. And the 207s are paying $3.90. That's over 1.5%. That's it. What else do we got? Albemarle, ALB. Go away, did you bother me? Abelmo, what the heck's going on here today? Same thing. Always. When I look at a chart, always 5 things. High, low, was, is. Down, up, down. Yeah. Next. That's it. There's 10,000 different companies. Why would I spend more time on this than I don't need to? The high is here. Now she's coming down. Next. Don't get me wrong. I like Abelmo. Abelmo was a good pick, I think, a couple of days ago. Next. What do we have? Thank you for that, James. Vish, how are you doing? User, good evening. Can we look at Visa? Gotta love me some Visa. What's going on? You like that? High, low, was, is. Look at this. Down, up, down, up, down. What's going on? Don't look like much to there. So we'll zoom in. All right. I'm going to say no, because here's your 30-day high, 30-day bottom, back up, back down. Give it a little bit. Wait for the bottom to turn and go back up again, if you really like Visa. Now, I do like Visa, just not this week. All right, what else do we got? What do we have over here? Sorry about that, Mike. Those two maybe tomorrow. Mike, I'm gonna take a picture of that, Mike. I'm gonna send it to your wife. I like to hear what she does to you about that one. All right. Anyway, J Smooth, TQQQ. Weren't you listening when I said I don't like the Qs? The Qs. You ready? Here we go. TQQQ. Who came up with that one? Jay. All right, Jay. Here we go. You ready, Jay? Pro shares. QQQQQ. Blah, 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 blah. Let's see how profitable this thing is. Holy crap. I can already tell it's crap. All right. Now, got a minor problem here. Would you like to know what the minor problem here is, Mr. J? Check it out. 2014. 2015. There's no 2016. There's no 2017. There's no 2019. There's no 2020. No 2021. So I'm going to say no to it already. Because take a look at the numbers. Okay. 4, 7, 6, 6, 11, 10, 4, 11, 13. It's all over the place. No consistency whatsoever. Jay, think about it. No consistency whatsoever. Goes up, it goes down. It goes up, it goes down. When you're looking at profits, and that's exactly what dividends are. That's the profits that the company's sharing with us. Because we are the investors. We buy, we sell. We are entitled. When you buy shares, you are entitled to a portion of the profits. Well, there's only 2 different companies. Half of them pay out dividends. The other half don't. You've got to choose what do you want. You can do a balance them, a little of this, a little of that. You know, your choice is your choice. You can do whatever you want to do. I'm just showing you what I'm doing. Not that I'm right, not that I'm wrong. It's just what I'm doing. All right, who do we have over here? We have... Yeah, I don't do Canadian stocks, sorry. Rick, CVX. Isn't that Chevron? Okay, it's CVX. Hell no. Come on, man. Why would I... seriously, why are you showing me something 30 days ago was the bottom, shoots up to a 30-day high yesterday, and now the profit's starting to be taken. So now it's going to drop. If you like puts, fine, buy a put. Anyway, so no. Uber has not been around 20 years, I know that much. Good little fish. How you doing? The real estate dude. How you doing, real estate dude? Drew Patty 4. Good evening, Miss Drew Patty 4, and how are you today? Okay, Riley wants to take a look at TSLL. TSLL. Interesting. Let's take a gander. Are you ready? High, low. Where was it? Where is it? Look at it. Down, up, down, up, down. What's going on right there? It looked like it's bouncing off the bottom, but today pulled back. Take a closer look. 30-day top, 30-day bottom. 1, 2, 3, 4 days up. Now it's coming back down again. Don't get me wrong. TSL, I'll buy it once in a while if I have extra money to throw away. The reason I say that TSLL is not really a company. It's more of an ETF. But it still has dividends. Next. Riley, Jeff, Mac, Daniel, VP David, gold and silver. Sorry, dude, I don't do gold and silver. Now, don't get me wrong. Some people like gold and silver. If you have enough money where you don't need to worry about it, you can buy some and use it as a dust collector. Because that's basically all it's good for until you cash it in. Okay, because gold and silver do not give you any kind of weekly or monthly return until you sell it. Now, it's a great storage of wealth, but it doesn't give you any cash flow. Timson the Great. I already said I'm not going to do SCHD. It's one of those companies that's just not profitable. Vish, just take his advice and go slow. Yeah, take your time. Don't be in a hurry. Stock market's been around for 400 years. It'll be here when I'm gone. It'll be here when you're gone, most likely. Hey, Jack, I saw that. Thank you. Okay, what do we get? All right, we already looked at Visa. YMAG is one, if you like. Yeah. Be more for you. YMAG, really? You really want to do that one? Okay, let's take a look at it. YMAG. All right, here we go. YMAG goes all the way back to, you got to be kidding me, 2 years? Yep, that's it. YMAG, who came out? Be more for you. Dude, same thing. 2-year-old company. February 15th, 2024. Let's check out the numbers, shall we? Watch this. 43, 59, 62, 63, 67. Hey, that's pretty good. But 63, that's down. 57, that's down. 19. This thing goes from 63 to 19. 63 to 19 is over 60% drop. Now, imagine this, if you will. Okay? Imagine. Because it's going to happen to you eventually. Eventually, if you're lucky, you'll get to retirement age. And then you'll get a check. And then the next check you get is 60% less. Now you tell me whether that's a good investment or not. Because it did. It went from 67 high, dropped down to 17. 67 to 17, that's over 60% drop. So imagine that. Put your 40 hours in a work week and you get what, $2,000 for the week? Great. Next time you come in, you make $1,400. And how the hell are you going to say, well, that's okay? No, it's not okay. Why would you invest in something that drops like that? Because that's all it does. Well, holy shit. Look at October 2024, 5 cents. It was at 67 and it went down to 5. And you think that's a good investment? Hell no. Well, you do it. I ain't going to do it. If it's not consistently profitable with 2 decades, no thank you. There's over 10,000 different companies. Why would you pick it? It's only 2 years old. That's like throwing the keys to your brand new car to some kindergartner. Hey, yeah, I know you're 4 years old. Yeah, take it for a ride. Yeah, no. Can we look at MDAI? What the hell is that? Never a good sign if I got to say what the hell is that. MDAI. Spectral AI Inc. No options, no thank you. Weren't you listening to what I had to say? Rule number 4. Rule number 4, weekly options only. This thing has no options. No. No, no. Who was the example? Oh, dude, I have no idea. Why does Amazon hate me? Because you deserve it. Seriously, Amazon's not profitable. Amazon does not have dividends. Amazon is a growth stock. It's not an income stock. Definitely in the wrong place, dude. Pfizer, 6% dividend with easy flip options. No, don't get me wrong. I like Verizon. I mean, Pfizer, I do. PFE. Not today, though. Check it out. Pfizer, all-time high. No, thank you. No, thank you. No, thank you. All right. Pfizer, we did that. Big Yellow Bird, how are you doing today? Daniel, can you explain the CPI Europe man here? Is it good for the stock market if it's low or high? All right, Daniel, the CPI is more or less the consumer pricing index. It tells you what the consumer prices are doing. Are they going higher or are they going lower? Are people increasing the price of the goods or are they decreasing the price of the goods? It has absolutely nothing to do with what we're doing. Okay? Because what we're doing is simplifying this so down to the T. Okay? Is the company profitable? It's got nothing to do with the CPI index. Does the company offer dividends? Nothing to do with the CPI index. Does the company have weekly options? Nothing to do with the CPI index. Is the company going up or is it going down? Again, not a lot to do with the CPI. Maybe, but not a lot. Either the company is profitable and you want to own it, or it's not profitable and you don't want to own it. Why is it that adults want to make this more complicated than it needs to be? Fabio, skiing is not right. I can't help you out there, Fabio. Wow, we got a lot of questions down here. Let's see if we can get some of them. Let's see if we can get to some of the questions. All right. Let's get comfy here. Comfy, cozy. Buy the onion dip. Peter Fader, how are you today? All right. David, all things are well. Thank you for that, David. Jack, the stock drops and the next week you covered call is below what you paid for the stock. What is the strategy to no sell at a loss? Okay, good question. All right, hold on a second. Okay, now sometimes it's confusing. You think that the stock price is actually that important. No, it's not. Okay, now let me explain why this is my point of view. You can agree with me, you cannot agree with me. Okay, I get two criteria and only two. Listen closely before you interject. Is the company consistently profitable? Consistent profitability has nothing to do with the stock price at all. Absolutely nothing to do with the stock price. It doesn't. They're either making money or they're not making money. That's it. Are they making money? Did they making more money this year than they did last year? It's got nothing to do with the stock price. It has to do with earnings. It has to do with revenue per share. It has to do with expense ratios. It has to do with a lot of things, but not the stock price. Okay, now we get that out of the way. Now, the company's profitable or it's not. That's one. Two, do they have weekly options? Great. Now let me show you a little bit of an example. Are you ready? 28 is the high of the year. Okay? 28 is the high of the year. 21 is the bottom of the year. I like facts because you cannot argue with them. You can't. Bottom's 21. Top is 28. Now, if I buy 1,000 shares at 28, I have 10 contracts. It's one contract per 100 shares. 500 shares, 5 contracts. 1,000 shares, 10 contracts. 100 shares, 1 contract. You see where I'm going? Okay, I always buy in increments of 100. It's 100, 200, 400, 800, 900, 2,400, whatever it is. Now, you think I'm concerned about the stock price. No, just a little bit. Let me explain. So if I buy at 21 or I buy at 28, it's really irrelevant. Do you know why? In the grand scheme of things, it's irrelevant. Because with 1,000 shares, I have 10 contracts. If the stock jumps up to 50, guess what? I still have 10 contracts. Nothing changed. If it drops down to $3, And guess what? I have 10 contracts. Do you see where I'm going with this? The stock price really doesn't matter. How many contracts you have, whether or not the company is profitable or not. Okay, so let's go back. Now, let's say I have 10 contracts. Now, I ask 5 simple questions. What did I buy it for? What did I sell against it? Where is it at now? Where does it look like it's going? And what should I do? Simple. They're easy questions. Is it going up? Is it going down? Is it consistent? What's going on? And every picture tells a story. That's Rod Stewart back in the 1970s. Every picture tells a story, don't it? Okay. High, low, was, is. Down, up. That's it. So, here's the thing. One, I have 10 contracts, regardless of what the price is, as long as the company is profitable and it has weekly options. Now, I can make money off of it. So I get 3 opportunities here. You ready? Change this. Okay. I, T, M. A, T, M. O, T, M. Okay? In the money, at the money, out of the money. ATM, ITM, OTM. In the money means I'm in the money. It means I bought it and it's actually worth something. Out of the money means it's out of the money. It doesn't mean anything. Okay, but here's the thing. If I buy it at 27, at this moment in time, at the money is 27. That's where the highest rate of return is going to be. In the money, the higher you go, 26, well, it's already above 26. It's already in the money. Okay? Now, out of the money, 29 means it's currently at 27, so 29 is out of the money. But I can still sell it. 2 strikes out of the money is paying, well, let me get rid of this stuff. Okay. At this moment in time, at the money's right there. I can sell at the money and pick up 70 cents. 70 cents on a $27 stock is over 2.5% for 1 week. Now, if the stock drops, now I have to sell 2 to 3 strikes out of the money because it's a safer trade. At the money is the highest risk. Okay? Highest probability. In the money is even higher probability, but out of the money is less chance of losing. Okay, so at the money, 70 cents, 2.5%. 1 strike out of the money, 38. That's 1.25% roughly. 2 strikes out of the money, 18%. Now it's at like 0.75. Not 1%, not 0.5%, but 0.75, like 0.75%. So 3 strikes out of the money, 8 cents. 8 cents on a $28 stock is about 0.4. Less than 0.5%. But here's the thing. It's still money coming in. The dividend still increases. You never, ever, ever lose until you agree to take less than what you paid for it. Remember rule number 2? Never sell for less than what you paid for it. If the stock goes up, you can sell at a profit. If the stock goes down, you can still collect a dividend. You can still collect a smaller premium, but never, ever sell for less than what you paid for it. So people think if the stock goes down and the stock gets exercised, that's your own damn fault because you're not keeping your eye on it. Think about it. You got kids, you got to keep your eye on them. When children are newborn till about 5 years old, they're suicidal. They do the weirdest shit because they have no clue that they're immortal. Seriously, the first 5 years, you got to stop them from killing themselves because they just don't know. But as adults, you do know. Is the company profitable? It's a yes, no question. Does the company have weekly option? It's a yes, no question. Is it going up or going down? I'll tell you what, I get my 5-year-old wait a minute. He turned 6 on Saturday. I can get my 6-year-old grandson and say, hey, Papa G, that baby's going up. It's not that difficult. Adults, you people have a tendency to make this more complicated than it needs to be. A company that's profitable. Weekly options. Is it going up? Great. I grab my 1%. I move on to the next one. There's more than 10,000 different companies. They're all doing the exact same thing. They are trying to make more money this year than they did last year. It's all the same. We're all trying to make more money this year than they did last year. Well, how are they doing? They're either profitable or more profitable than last year, or they're not. There's no ifs, ands, and buts. It's either higher or it's lower. Okay? Now, I'm a Gen Xer. I don't sugarcoat anything. It's going up, it's going down. There is no in between. There isn't. It's going up, it's going down. You flip a coin, it's heads, it's tails. Now, some people will bitch, moan, and argue. So, well, it could land on its side. Okay? I'm 62. I have never, ever, ever in my whole life flipped a coin and had it land on the side. Never. Not saying that it can't happen, because I've heard it happening. Flipped a coin, landed on its side. Well, alrighty then. But not normally. I like predictability. I like consistency. I don't like pie in the sky crap. I don't buy at the high and I don't buy at the low. I like to be somewhere in the middle where it's a comfort level. Now, we're all different. We all have our different goals. We all have our different aspirations. And we all have our different risk factors. You got to decide what's right for you. Either it makes sense or it doesn't. Okay? If it doesn't make sense, you're basically wasting your time here. Don't get me wrong. I appreciate you showing up. I appreciate you interacting. But you got to remember where I'm coming from. In my younger days, yeah, I was looking for growth. I was looking to buy that stock and have it shoot to the moon. Well, now that I'm 62 and retired, okay, I don't have the luxury of being wrong, which means if I'm wrong, I lose money and then I got to go back to work. Nah, I don't want to do that. Don't get me wrong. I work plenty. I just don't get paid anymore. Think about it. When you retire, yeah, you're still working. You just don't get paid for it. Okay? Because you sign out of the job. Boss man, I'm out of here. And you go home, and then your wife calls and says, honey, can you do this? Oh, honey, the neighbor needs this done. Oh, honey, your father needs that done. Oh, honey, you got to go volunteer. Yeah, it's never ending. It's better to stay at work because you get paid for what you do. When you retire, you still work, you just don't get paid anymore. It's a horrible situation. But you know what? I still have the ability to say no. Yeah, I'm not going to do that. All right, so what are we looking at next? Next. Jack, what's happening? Jack McDonough. Okay. Can we look at MDAI? We already looked at that. That was a no. Sorry. Except AI stocks. No, I don't do AI stocks. They haven't been around for 20 years yet. Look at HIMS. Oh, I don't want to look at HIMS. I actually have some and it's going the wrong way. Oh, lovely. They're in a lawsuit. So, yeah, they had a new 30-day bottom. Another 30-day bottom. Yep, I actually own it. I own it, I think, in the 40s. Yeah, I own it in the 40s. And what is it down now? It's at 15. Am I panicking? No. Is it still giving me something every week? Yep. Not a full 1%, but it's giving me something. Until this lawsuit is done and over with, who knows what's going to happen? This is where it tests your character. It seriously does. It tests your character. Never sell at a loss. Well, I jumped in at 40. Now she's down to 15. Now, don't get me wrong. I'm going to sell the 16s or the 17s because look, okay, this is a perfect example of what we talked about earlier. Now, I do own some. I own it in the 40s, which is way the hell up here. Okay, the 40s are way up here, not even on the chart anymore. So we're down here at 1580. But look at what next week's options are selling for. Okay, now remember, I'm in at 40, way up here, and we're down here at 16. But look at the 17s. The 17s are paying 40 cents. 40 cents is almost 1% of my investment. Because remember, I'm in at 40. I'm selling somebody the rights to buy it from me at 17 and still picking up 1%. So you understand that? I bought HIMS in the 40s. Now it's down to 15. So next week, I'm selling a covered call at 17 because the 17 is paying 40 cents a share. which is over 1% of what I paid for it. So if the stock goes down, I really don't care, because I think I have like 800 shares. So I have 8 contracts. So 8 contracts multiplied by 40, that's 40 cents per share, or $40 per contract. 8 contracts would be $320 just for that one position. Every single week, after week, after week, after week, until I sell. I got no intentions on selling until it goes back over 40. Because I bought it at 40, ain't no way in hell am I selling it less than 40. It just ain't happening. Okay? I always look at, what did I buy it for? $40. What did I sell? Well, last week I sold the 20s. Where's it at now? $15.80. Where does it look like it's going? It's going down. What am I going to do next? I'm going to sell the 17s, pick up another 1%, push it into next week, see what happens next week. But I look at it every single day. And I ask the same question every single day. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? What should I do? Okay? But I always keep in mind the 2 goals: consistency of profitability and preservation of my capital. That's it. It's a simple strategy made for a 9-year-old, and I don't know why adults want to make it more complicated than it needs to be. The company's profitable or it's not. It has weekly options, or it doesn't. It's either going up or it's going down. That's it. It was created for a 9-year-old. Why do people want to complicate it? Let's keep on going. Move my chair. Move my chair. All right, what do we have? Kevin, what's going on? The count. You can't count. 1, 2, 3. Melovets, good evening. Sandra. Hey, Alex is in the house. Woohoo! Alex, how do I get a seasonality chart? Alex, I told you, dude, you really got to drop your numbers. I can give you a buzz. You've been coming week after week after week after week, and we haven't had a conversation yet. Dude, send me a number. We'll chat. The seasonality chart is right up here. Market Watch. No. Wait a minute. Sorry. The seasonality chart is right here. You got to click on that right there, and then you look under seasonality chart. Daniel likes dividends. Way to go. Cindy, Walmart. Ooh, gotta love Wally World. WMT. Hell no. I'm going to yell at you now, Cindy. Okay, now, Cindy, why? Now, I understand if you own it and you're all happy. I have Walmart. It's at an all-time high. Yay. Why are you showing me? It does us no good at all. It's at an all-time high. I don't buy anything at an all-time high, so you shouldn't be showing me something at an all-time high. There's no opportunity there for me. I don't buy at the high. It just doesn't make sense. Hey, Stevie, ASX. What the hell is that? ASE Technology Holdings. Hell no. 2 reasons. All-time high, monthly options. No, thank you. You aren't paying attention. Cindy, thank you. Coffee Bean, what's going on? Uh-oh. See, do you guys pay attention to some things I say? What happens if the stock goes below your strike price? At expiration, you will lose? Number one, that makes no sense, but I see where you're going with it. Yeah, stocks go down. Imagine that. No, seriously, imagine that. Watch this. Up, down, 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 up. Yeah, it's coming down next. That's all they do. They go up and they go down. That's it. What happens if a stock goes down? You cannot answer the questions of tomorrow with the information we have today. Number one, I wouldn't be buying at the high of the year. Number two, I wouldn't be buying monthly options. I don't do them. They just don't work out right. Okay? NVII. What the hell is that? NVII. Rex Nev Div. Okay, growth. Sorry, dude. No options. No thank you. It's like you weren't paying attention either. Rule 4, weekly options only. Lundo Crypto, you weren't listening either. Gold does not give weekly options. Gold does not give any options. Gold has no cash flow to it. It's a dust collector. You put it on your desk, you stick it up on the night counter, wherever you want to put it. It collects dust until you sell it. That's it. Can we look at HUT? What the hell is HUT? HUT 8 Corporation. Okay. No idea what it is, but here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up, down. Not today, it ain't very good. Ooh, J-Ho. Dow, D-O-W. Now, I do have some Dow, but I'm getting rid of my Dow this week because see what happened right here? Let's zoom into that. 30 days ago, we're down here 26. Now we shoot up to 35. Now it's pulling back. Why do you think that is? From 26, the bottom, to 34, 26 to 34 is $8. $8 on a $26 stock is well over 30%. Somewhere in that area. Joshua, how long do you usually hold the calls? Okay, Joshua, I don't buy calls. So I don't hold them. I sell calls. I'm a seller. I'm not a buyer. Because think about it this way. Most options expire worthless. Jack McDonough, this a recording. Ask me tomorrow. Tomorrow it will be. Here's a funny thing, Jack. You ready? Record, recording, recorded. Those are the past, present, and past, present, and future tense. It's not a recording. It is being recorded. It's actually live at this moment. So we're live now. So as I'm interacting with you at 10:40 p.m. on the 12th day of February 2026, it is actually live. Any other time than 10:41 p.m. on the 12th day of February, it would be a recording. Okay, so it is being recorded at the moment. So it's live at the moment. Sandra, how are you doing? B4 more. Good evening. Ronnie, what's going on? Dingy Dongy, please look at him. We already did. Okay, Billy John, we already looked at AT&T. Ooh, Mike wants to take a look at IBM. Ooh, IBM. Now, I'm trying to go through these as fast as I possibly can. We're going to say no to IBM, but we're going to keep our eye on it. And do you want to know why? Take a look at the last 30 days. 12, right there. Here's your last 30 days for IBM. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down. What's going to happen here? IBM will find a new bottom this week or next week. So I'm going to write IBM for next week because we're not doing it tomorrow. But IBM's on the list for next week. You got a nice list for next week. Nice. Gotta love that one. All right, UiPath. What the heck is UI? UI. Hell no, no options. ExxonMobil. Mindang. XOM. ExxonMobil. Hell no. Weren't you listening either? I don't do the high of the year. It just doesn't make any sense. BYDDY. What the hell is that? BYDDY. Bidco Limited ADR. Hell no. What did you paint today? Oh, I painted the inside of the... okay. What my company does is we convert boats to run on solar electricity. Because after all, we live in the Sunshine State. And there's a lot of water around here. And I like boating. Nice thing about solar electric boats, if the sun is shining, you can go boating. So we picked up this small little boat. I think it's one of those Wave Runner jet boats. We could fit like 6 or 8 people in it. It's a small one. It's not really huge. But we put 2 pod drives on, 2 electric pod drives, 8 batteries, and 2 solar panels. So we can ride all day long for free. Think about it. Just drop the boat in the water and go. Do you know how many moving parts in an electric motor? One. That's it. You know how many moving parts in a gas motor? Hundreds. And the funny thing about gas and diesel motors, you actually need an electric motor to start a gas or diesel motor. So why don't you just get rid of the gas and diesel motor and just have the electric motor? Because you need the electric motor anyway. Anyway, let's keep on going. That's what I painted today. MDAI, where it looks at that, it's going to be a no. Hey, James, any time to look at WM? Waste management? Okay. I think waste management's a monthly. It is. Sorry, dude. I don't do monthlies. The numbers just don't work in my favor, so not even worth. Sorry, Jane. Canandry. Oh, Canandry. What platform program am I using? This is called Think or Swim, and it's offered through Charles Schwab. Okay, and if you are going to use Think or Swim through Charles Schwab, I would really suggest you download it onto your computer. Don't use the online version. Don't use the mobile app. Just confusing and clunky. Lockheed Martin. Ooh, LMT. Nice one. LMT. Not this week, it ain't. Auto Biz. Check that out. It's at the high of the year. Brother, why are we doing that? Now, if it was down here going up, yeah, I'd do it. But I don't buy anything at the high. Hillbilly John. Thank you there, Hillbilly John. Thank you. Okay, we already looked at Visa. Do Nail. Shell. What the hell is Nail? Nail is a no, only because, check it out. 30 days ago, we were here. We dropped, shot up. I don't buy at the high. I don't care if it's a 30-day high. It went from 54 to 80. 54 to 80 is 26 bucks. That is over a 50% increase. Why the hell would I want to buy anything after it jumped up 50%? Here to here, 50% increase. No, thank you. Do the numbers. Numbers don't lie. Now, don't get me wrong. If you like the company, fine. But why are you buying it after a 50% increase? Think about it. If you bought it and 2 weeks later it jumped up 50%, you don't take your profit, don't be surprised if the market maker takes it away from you. Because it's not a profit until you take it. It's not a loss until you take it. You actually have to agree to sell at less than you paid for it. You actually have to agree to sell once it goes up. You're in charge of everything that happens. So whether you make money or lose money, it's your own damn fault. Okay, you shouldn't do anything you don't understand. If you buy something and it drops and you sell it and you take a loss, that's on you. Okay, I got very simple rules now this was created for my 9-year-old. I do a lot of different trading, but this strategy here, okay, I only teach one on this channel. Okay, so we are getting ready to do other channels because people ask about other trading strategies, but I only do one trading strategy per channel. And this one, covered calls on a good quality dividend stock. Make sure the company's profitable. Never sell at a loss. Weekly options. Okay, we already did ExxonMobil. Have you worked on Walls Exchange? Nope. Say, he, Billy John, I got my trading lessons the hard way. Okay? Now, what do I mean by the hard way? Well, I had a manufacturing company back in late 80s, early 90s, and I manufactured stuff. And I made so much money, I had to figure out where to go. So, yeah, I tried all the traditional stuff, collectibles, real estate, antiques. But the only thing that I figured out, there's no employees, no overhead, no brick and mortar place, no electric bills, no phone bills. Okay, I can come and go as I please. As long as I have the internet connection, I can trade anywhere. If you look at some of my videos, you'll see me on the beach trading. You'll see me in the woods, in the virgin woods on land that nobody has ever stepped on. It's if you go to a place where man has never stepped, and you can tell when you're walking in it, it's like, oh yeah, nobody freaking stepped here before. That's up in the wilderness, way up in Maine. If I have an internet signal, I can trade. Do you hold your horses? Kevo, no idea what you mean, but okay. Eric, do you have a book I can read on this? Yeah, Eric, I've written 15 books, but I promise everyone every night I do not try to sell anything while I'm here. This is strictly entertainment and education. That's all it is. Okay, if you want to buy something, go to the website, have a search around. The website is going to be redone, so blah, blah, blah. I don't want to talk about that because I don't want to be accused of trying to sell shit. Because I'm not. I'm not trying to sell anything. I'm just trying to educate you guys. Sir, you mentioned you purchased hymns at 40. Now it's at 15. You are doing a covered call for 1% at 17. Okay, that's a statement. That's not a question. Okay. What if it gets triggered? You will lose money at selling at 17. No, dude, I won't. Okay, let me explain to you. Let's go back to hymns. HIMS. All right, now, for the fun of it, let's actually do a trade on hymns for next week. Are you ready? Here it is right here, hymns. Okay, I'm down $13,000 on hymns. I'm down $13,000 on hymns. That doesn't mean I lost $13,000. Check it out. Bring your cursor right on top of hymns, right click, create rolling order. Whoops. There it is, rolling order, okay? Basically what I'm doing, it says I'm buying back the 19 and I'm going to be selling the 17. Watch this, let's get this out of the way. That's out of the way, okay? So, right down here, okay? Watch this, you're going to love this one, watch. I'm going to blow it up so that you can see it better. Watch this. Come on. Here we go. Oh, come on. I was going to show you something, but it stopped working every once in a while. Give it a second. Oh, reboot. There's got to be a way to upgrade the software on this thing. There it is right there. Not that one. This one. Nope, that ain't it. Come on. Let's go back. Try it one more time. All right. There it is. Whoops. There. Come on. There we go. Now let's try it one more time. All right. And it's going to pop up right here. There it is right there. Nope, not that one. That one right there. Here it is right here. All righty. See, now you can see it better. Okay? Currently, I have the 20 February at 19. Okay? I could roll it and pick up 58 cents. Now, 58 cents is a lot more than 1%. Let's see what happens when I change it from the 19 down to 17. Okay? Hold tight. I'm going to put that one right there. Right like that. That way you can still see it. Now, hold on. Come on. Sit tight. You're going to like this. Watch. Wait, let it pop up. There it is. All right. Now, at this moment in time, if I go 20 February to 27, that means I'm pushing it forward 1 week. I am buying back this option. I am selling that option and I'm picking up 58 cents. Now remember, I got it at 40. 58 cents on a $40 stock is more than, it's like 1.3 for 1 week. If I change it from the 19, see here, 19, 19. If I change it to 17, goes fit 19 to 17, okay, same time, 20 February, 27 February. Well, now I'm bringing in $1.10. And $1.10 on a $40 stock is 2.5%. Where's my risk? My risk is if the stock goes above the 17. Hold on. Okay, here's where we are right now. Okay, 1580. 17 is right there. So yeah, that right there is a risky move because it's at 1580. Now I could change it from 17. I could change it to 18 and still pick up, well, that's over 0.5%. That's 23. So if I change it to 18, all right, if I change it to 8 from 19 to 18, now I'll pick up 80 cents. That's 2%. So just because I go from this week into next week, pick up 80 cents, well, here's the thing. You're not buying it from me at 18 because you're paying 80 cents per share. Someone, somewhere, is paying to buy this with that. So now it's not 18 to break even, it's 1880. So 18 is here, but 1880 is right there. Makes it more challenging for people to get. So you got to take a look at not just the option. What am I selling? Because if I sell the 17 or I sell the 18, whatever I collect, you got to add it on to that strike price. So it's not $18. So if it goes to $18.10, no one's going to buy it because break even is $18.80. They got the right to buy it at 18, but they paid 80 cents a share. And 80 cents a share on top of the 18, now break even is $18.80. And nobody buys stocks just to break even. Think about it. If you bought the 18s, you have the right to buy it from me at 18. Let's say it jumps up to $18.50. And you say, you know what? I want it. Well, guess what? You just lost 30 cents because you paid $18.80. It makes no sense. It's a numbers game. What are the numbers telling you? Is it a profit or is it a loss? Okay? So yeah, when I change the strike price from 19 to 17, now I'm at risk at 17. But how much did that person pay for the right to buy it at 17? If they paid 80 cents, well, now it's $17.80 just to break even. Nobody wants to buy a stock just to break even. Okay, we got 3 minutes left. What else do we want to? I'm going to answer some questions and then go from there. All righty, let's do this. Ooh, Oracle and Disney. I like both of those. Okay, Romeo, Ame. Yeah, I don't do realty income. It's a monthly. No, thank you. Fun 28. I love Microsoft. I do. Ryan, CFG, AMSL. We'll have to take a look at it next time. Steve, ASX. Next time. Blake, good evening. Vish, how are you today? Okay, Vish, we'll have to take a look at next time. William Decker, like painting somethings. You have paint on your hand. Yeah, I get that. Yeah, I get that. Oh, my nickname was Grubby growing up. Yeah, because, if there was dirt around, it always found me. Isn't that weird? Okay, Zem, ZPGI. We'll take a look at that next time. Schwaz 8, ATT and ALL. Just to let you know, ATT is actually T. Just T. AT&T is just T. That's it. No ATT, just T. Okay? Next time. Kelu Kona, Hawaii. Mahalo. All right. CHCO. Let's take a look at it next time. Okay. How about Cho? Next time. Next time. We get 2 minutes left. I want to get to many of these questions. Drew, where are you going to send out your list for members? Oh, when am I going to send out members? Would love to receive it weekly if we could. I send out the list to the members Sunday night. Okay, because first thing Monday morning, I want everybody to have enough time to take a look at them. Okay, Cho. Okay, Keilu Kona, Hawaii. Next time. Genetics. APP. Next time. All right, that's it for those questions. All done there. Okay, Vish, I already said we'll look at that next time. Okay, DT, but it can be taken away from you at 17. All right, here's something you got to understand, DT. Number one, if I drop it to 17 and it goes above 17, Drew, I am a member. I missed it. Where do you send the list? Okay, Drew, you get sent an invite to each and every live show. At the bottom of the invite is the stock list. Okay, so if you look at the email and you just go to the link at the top of the email, yeah, you're missing the stock list is at the bottom of the email. Okay, so you can't show up to a live trading event without getting the list, because the list is with the invite. It's just at the bottom. Okay? Yeah, a lot of newbies, they don't go to the bottom of the list. They just go to the top and go to the link. Say, yep, I want to go. And they get all excited. And they show up without knowing where the stock list is. It's at the bottom of the email. All right? All right there, Mr. Drew. Caffrey, thank you for that. Vish, I already told you. Please, only ask a question once. I got 9 cameras in front of me. I can't answer each and every question as they come up. Camp Road, can you explain profit and loss when rolling a covered call? Yeah. Okay. When you're rolling a covered call, right? Check this out. Okay. See this right here? This is the roll. I'm going to click this right there. Okay. There's the information right there. A diagonal, which means I'm buying one option back the 20th of February. I'm selling the 26th of February. Okay. I'm changing the 18th, the 19th to the 18th, and I'm picking up 80 cents per share. And that is a profit. See right there? It says credit. Credit, $550. Not debit. Debit would be a loss. Credit is a profit. Okay? Eric, CLX, Clorox, next time. Can you explain profit and loss? Yeah, we just did that. Sweet Den, James will not do the NSD. Thank you there, Sweet Den. JP Morgan, next time. Do you post a list? Absolutely. But you got to be a member in order to get it. Love Electric. I like it too. It's simple. It's easy. You know the one thing I really like about my design for my electric pod drives? I can change a motor in less than 5 minutes. Can you believe that? Less than 5 minutes I can change the motor. You unplug it, you pop out the screws, and just lift it up. That's it. And they're not even screws. They're push pins. You push it into it with the spring, and you put the little clip in, pull the clip out, yank it out. There's 6 of them that holds the motor in, and it just sits right there. It's a simple, easy design. It's just freaking crazy how easy it is. Why are you in HIMS when it doesn't pay dividends? Thank you, Jersey. Every once in a while, someone tells me to buy something for them. Okay? I do invest for other people, and when they tell me to buy something, I buy it. Whether or not I agree with them is irrelevant. You know, if you told me to buy something for you and I was handling your money for you, and then, yep, that's all it is to it. Hey, I like this one. Buy it for me. Okay. Thank you. Have a blessed day. Thank you, Oscar's House. That's a no. Eddie P. What is the meaning of the t-shirt? Eddie P, you ready for this? That's a no. What the hell are you thinking? That's it. That's the meaning of the shirt. Okay, you have no idea how many people ask me about companies that do not fit. Okay, if it's not profitable, that's a no. Has no options, that's a no. Has no dividends, that's a no. And sometimes some of these companies are so crazy, like Realty. Hell no. What the hell are you thinking? Think about it. It's a simple trading strategy. If you try to change it, it's like, no, it just doesn't work. You know, you get up in the morning, you put your pants on one leg at a time. Okay? Don't be trying to change things that don't need to be changed. Drew, does it come through email or Patreon? Okay, Drew, whatever email address you use to sign up to be a member, that is where it's going to be sent. No, Alex, you got to buy the t-shirts. It's not, I'm comfortable, but I'm not comfortable enough to give money away. I don't know if that makes sense. Vino, thanks for sharing your knowledge with us. Thank you. Always good to see your stream. Yay. Thank you, Vino. All right, so done. So we got all those. Now we got one more set of questions. Let's see how many of these we can go through. All right. Mark Stuckey. Greetings, James, from Ohio on this beautiful Thursday. Yes, it is a lovely day. A nice day. Ooh, I went out to the boat today because we got some mechanics coming to put in some new shaft seals. It's called packing seals. You got to pack the shaft so the water doesn't come in so much. And then we're going to put in new, what do you call that? Thank you, Caffrey. We're going to put in new filters and new air filters, because you need to update those. So, yeah, we're looking forward towards that. And get one of the through hulls changed because that's important. When those go bad, your boat can sink. That's never a good thing. All right, what else do we got? Jack. Addendum to above question. Assuming the price rose above the price you paid for the stock. The stock drops the next week you're covered is below what you paid for the stock. What's the strategy? So, okay. Yeah, basically you just keep looking every day. Also, there's an ability. Watch this. Hold on. Watch this, Jack. All right. Now, that's the what do you call it? The trading platform. Look at the chart area. Okay. I'm going to take my cursor, put it right on the chart area. I'm going to right click. See that window that opens up? Right towards the bottom. Create an alert. There you go. If I am concerned about a stock that I sold a call less than I paid for it, I'm going to put the price right there. Okay? Then, if it does get even close to the price that I put in there, I'm going to get an email. I'm going to get a text, and I'm going to get a mail message right on my platform. 3 ways of getting in touch with me if I'm concerned of losing money. So that's what they're there for. If you sell a call less than what you paid for it, set an alert. If it gets close to the number that makes you a little nervous, you will be emailed, you will be texted, okay? Then you go in and you take a look at it. Everything's there so you don't have to lose any money. You just got to know how to structure it so that you don't lose. Let's keep going. Hope that made sense, Jack. Greenwoods tomorrow. Next time. Mixed martial arts. How are you doing today? Corey, thank you for that. Can you check GDYN next time? Sorry. Andriy Mutsky. Okay, can you flip the horizontal so well mirrored the image? You mean kind of like this? Kind of like that? Is that what you mean by flipping the screen? Now, you're not the first person who told me that it's mirrored. Okay? Think of it this way. I got 1,600 videos. You think if there was a way for me to make it normal, I would have by now? Think about it. Not one of those videos is AI. Every single video is me standing in front of the camera. Okay, I've been doing this for a very long time. The selfie camera on the iPhone does not allow you to invert the picture. So when it goes to YouTube, it comes out backwards. Unless you know of a way for me to fix it, I'm terribly sorry. Okay, stock 2020, we've already talked about that. Okay, if stock drops, you lower your strike price low enough till you're not at risk of losing money, but high enough for you to get some money coming in. Because you got to remember, before you even were aware of this type of scenario, most people just bought the stock and collected a dividend every 90 days. And that's basically all they did. This is just a way to tweak the system a little bit to get a little bit more money out of your endeavor. Living to laugh. Amazon on the downward pattern to about 180 before turning back up. Could be. Vino, add one more line to your T to say, yes, I know it's merit. No, I can't fix it. I like that one. I do. I'm pretty sure there is a way of fixing it. I'm pretty sure someone has fixed it. Just that nobody has told me what it is. Thank you, Vino. All right, let's keep on going. Matthew, do you trade your whole account every week or just a percentage? Do you have a minimum daily volume on companies? Ooh, I like these questions. These are actually good questions. Here's the answers. I used to have 98% of all my money invested at all times. Now, I do have a margin account, so I don't do that anymore. I have to leave some cushion because when old Donnie Boy says something stupid and people panic and they sell at a loss, stocks drop. Do you remember what happened last April? Tariffs, and the stocks dropped. Every single stock dropped in the second week of April. So I got 4. Count them. I got 4 margin calls last April. So with that DTS, that Trump derangement syndrome going around, bitch, moan, complain all you want. I really don't want to hear it. Don't care. Okay? Honestly, I don't. You don't like them? Fine. Don't like them. Okay? Some of us didn't like Biden. Some of us didn't like Obama. Some of us didn't like Clinton. Deal with it. 3 more years. It'll be over with. So, that being said, I don't do politics, so don't get on my case. If he says something stupid, which he's notorious for doing, and the people panic and they sell off and stocks drop, you need to have some cushion to make sure some money's left there just to take the good with the bad. Because the bad's going to come. You want the good all the time? Ain't going to happen. They go up, they go down, that's it. Okay, they don't come to the house and cook you dinner. Don't take the dog for a walk. They go up and they go down. And when they go down, if you're in a margin, you have a chance of having a margin call. I actually have a margin call in one of my accounts at this moment. We're trying to figure out how to get out of it with not much effort. Now, options are going to expire tomorrow, so we will get out of it tomorrow, and we will satisfy that margin call tomorrow. Okay? So, that's how it is. And do I look at the volume? I don't need to look at volume because every single stock I do, Dividend Kings, Dividend Aristocrats, Dividend Champions, so on and so forth, they're already the cream of the crop. Almost every single one trades over 1 million shares a day. So it's nothing I need to worry about. But it's a very good question. And yes, volume does count. You do not want to be the only person on the dance floor because you're dancing to the music. You got to pay the fiddler eventually. And if you're the only one on the dance floor, that's not a good thing. They sweep my account clean. Okay, I don't know what that means, Alex, but okay. Yeah, Matthew, I know GIS is General Mills. Okay, so what else do we have? Stony. Yes, Coca-Cola is a good stock. You're right. Stony, thank you. Hi. EPD. No, EPD doesn't have dividends. Do you ever cover dividends on a loss? I think last year I lost 4 trades. Okay, I made like 3,500. Count Caffrey. 3,500 trades, and I lost 4 last year. So this year, I haven't lost any yet. But we're only into February. What else do we got? Thoughts on prop firms. Alex, if you don't mind all the ifs, ands, and buts, then yeah, do it if it works for you. This trading strategy here probably wouldn't be very good for a prop firm. because they want higher rates of return. All right, what else do we have? More questions. Should I invest my savings into FTX or Luna? Now, Tia, I'm going to tell you something. I know absolutely nothing about you. So for me to give you advice would be me doing a disservice to you. See, I don't give advice. I don't give tips. I don't give anything. Okay, the only advice I will give you is education, patience, and logic, common sense. Those things. Camsack. I'm not even gonna acknowledge that one. Ibby Ibs. What's the best app to use for starting investing? Now, again, I can't give advice if I don't know anything about you. Okay, I'm not trying to be rude or negative in any way. Okay, I have no clue what it is you're looking for. I have no clue how old you are. I have no clue what you're working with. I have no clue what your education level is. I have no clue what your goals are. So for me to give you any advice whatsoever would not serve you properly. If you want to have a conversation, and I say this to everyone, you want to have a conversation, DM me your phone number and I will call you personally. If you think that you are having a conversation with me through an email, through a text, through a WhatsApp, through a Snapchat, or any of those, you're not. I don't do that. You want to have a conversation with me, pick up the phone, call. I'll leave your phone number. I will call you. You go to the website, book a call. I love talking to people, and I promise you I will not try to sell anything. I haven't tried to sell anything tonight, have I? I'm not interested in selling you something. I'm interested in producing a show that everybody learns from and to create a legacy for my children, my grandchildren, my great-grandchildren. So when I am gone, they'll have something to look at. All right, what did Papa G do in this situation? What did Dada do in this situation? Well, I've seen this before on one of his shows. Let's take a look at it and see how he did it. That's what I'm doing. Okay, you just so happen to be here to glean the fruits of my endeavor here. Let's keep on going. What else do we got? Ooh, Amir's Gaming, eBay. We can take a look at that next time. Clearly, oil all the time. Standard deviations. Take a look at, let's say, a monthly chart. Okay, CL. Is that Colgate Palmolive? We'll do it next time. We're already past 11 o'clock, which passed my time to be here. I'd like your assessment on Dell. I love Dell. I do. I actually have some Dell, but we'll check it out next time. James, does your strategy work in a bear market? Absolutely. Jack's Box. Think of it this way. Bear market, bull market, doesn't matter. Okay, we're looking at companies that have been consistently profitable for over 5 decades. Some of them over two decades. Okay? But think about this. You got companies that have been incorporated since the 1800s, over 100 years old. Coca-Cola, Wells Fargo, Bank of America, Colgate Palmolive, Clorox, Hormel, Harley Davidson, Ford, General Motors. I can keep going on and on and on. These companies have seen World War I, World War II, Vietnam, Korea, the crap that happened in over the Desert Storm, the Iraq-Iran bullshit, all that crap. All that crap. What else did we see? We seen the stock market crashes. Yeah, I said plural, crashes. The stock market crashes or pulls back, retraces, corrects, whatever you want to call it, every decade. Every decade it goes up, boom, it crashes. Goes up, boom, it crashes. Every decade, okay? 2019, 1919, 1929, 1987, 2000, 2008, 2021, 2024. We've got another one coming. Whether you want to agree with it or not, besides the point. But here's the thing. If you collect the shares, allow yourself to have contracts. The contracts is what's important. Because is the company profitable? Yeah, the stock price will drop, but you still have the contracts to enable you to get some money coming in. And if they consistently increase their profits, regardless of what's happening in the economy, I mean, we've seen a lot of crap in the last 100 years. Why is it that Johnson & Johnson is profitable every year? ExxonMobil, profitable every year. Microsoft, profitable every year. There's a whole bunch of them. There's at least 300 companies that have been profitable for consistently 10 years or more. Wait a minute. Yeah, 10 years or more. Okay. Aaron, at my dad's old job, he would auto-deduct $5 a paycheck from 1997 to 2004. He invested in military stocks, and he checked it a couple of months ago, and he's up $22,000. Should I invest in it as well? Okay, so I'm going to make the assumption, okay? 1997 to 2004. You could do that, okay? You could also do dividend capturing. You could also do dividend capturing 2.0. You could also do buying and selling stock. You can do a lot of things, but is what he's doing working for him? And if it's working for him, great. Let him do it. But there are other ways to make it just a little bit better. Now, is he selling any covered calls against all his positions? If not, why? It's just extra money. And no, you don't have to sell. If you put the strike price out far enough that it doesn't get called, it's just more money added to your position. Aaron, hopefully that made sense. Lonzel Graham, my first day here. Well, good afternoon or good evening. Thanks for showing up. Thanks for interacting. ATH means all-time high. Okay. Now, acronyms could mean almost anything, depending on your point of view context. Okay? What's the context? See, if I'm at a mechanic shop, ATH might mean something totally different. If I'm a farmer, ATH might mean something different. If I'm a fisherman, ATH might mean something totally different. Okay? You have to figure out who you're talking to. We're talking to investors. Okay, so investors, ATH, all-time high. Okay, that makes sense. If I was a farmer, ATH might have been something in. Well, at the top of the hill. ATH, at the top of the hill. No, not ATM, at the bottom of the hill. ATH, at the top of the hill. See what I mean? Anyway, let's keep on going. All right. Kehono, I lost $5,000 in EXK today. Silver bombed. All right, can't help you out with that one. That's EXK, never heard of it. Jax. James, does your strategy work? You already asked that question. Vino, hello. How are you, James? Ooh, CVS. I love CVS. Next time. Lyft, no. MSTR, oh, double hell, no. Okay, take a look at Lyft. Take a look at MSTR. Go check the profitability year over year over year over year for the last 20 years, or even the last 10 years. You're going to find out, no, it's not a great investment at all. Moonshine, howdy. Just got this stream in my recommendation. Well, jolly good there, laddie. All right, would you hold out on MLI or get in now? My logic is Mueller does HVAC cooling systems and copper fittings, etc. With all the data centers popping up, somebody needs to supply all that. I'm going to agree with you 100%. No debt, healthy balance sheet. Okay, now think of it this way. What does the stock price movement look like? The stocks only do two things. They go up and they go down. Lovely, great. Does the company offer dividends? Do they share profits, or do they take the profits, put it back into the company for escalated growth? That's another question. Then you need to ask yourself, what is it that I want out of my trading? Now, you know what mine is. Simple, safe, predictable, consistent, 1% per week. I don't want to hold on to anything. Okay, as the company's going to a profit, I want to take that short little ride, grab the 1% as it drops, then jump on out. Simple. That's what I want. But what do you want? Running Gold, you have a great night. They do seem like a good value play. Okay, hold on a second. Let's go back for 1 second because you're new here. Let's try this out. MLI. MLI. Hell no. There's my answer right there. It's a monthly optionable stock, which means the maximum I'm going to get out of this thing is 12 to 24%. I'm not looking for capital growth. I'm not looking for the stock to go up. I could care less. Is the company profitable? Do they have weekly dividends? Weekly options? The answer is no. So no. For me, if you like it, hey, more power to you. All right. Dum. Fabio, the screen is not right. I know. Can't read it. Can't help you out with that one. Hey, Seuss, what's happening? Are you Atria? I'm not Atria, but okay. Altria is a different thing. Is this about buying options? No, JV Joe, this is about selling options, not buying. Thank you, Rex. Option trading stream. Thank you there, Joe. Jack Massey, if you buy at 30 and it drops to 20 at the price you place the covered call, you can't at the money. What would you do? Will get called away at a loss. Okay, Jack, never once did you ever hear me say, if the stock drops, I would buy at the money. No, I would do 2, 3, 4 strikes out of the money. Got to give it some wiggle room. Okay? The only time I do at the money is when I'm buying or the stock is right level at my purchase price. That's the only time I do at the money. Most of the time I do 1 strike in the money because it's a safer trade. Okay? I do an out of the money when the stock drops and I have to drop my strike price. Because no matter what happens, I want something coming in. Whether it's 1%, 2%, 3%, 0.5%, 0.25%, I really don't care. Okay, cash flow is cash flow. It all adds up at the end of the month. At what price do you place the covered call? Okay, again, I honestly don't care. My concern, let's do this right here. Okay, check this out, Jack. High, low, where was it? Where is it? It went up, gap down, now it's going up again. Okay, so walk through it slowly. 30 days ago, we're at 120. We jumped up to 140. Now, 120 to 140 is a $40 move. No, wait a minute, no, it's a $20 move. But a $20 move on a $118 stock, well, that's still over 10%. So think about it. It jumped up 10%, dropped down more than 10%. Now it's going back up again. Okay, here's the bottom. 1, 2, 3, 4, 5. 5 days to the upside. So it clearly looks as if it's going up. But it's a monthly, and I don't do monthlies. But it's always taking a look at where's the stock? Where's it going? Where does it look like it's going? It looks like it's going up. But it's still a monthly, and I don't do monthlies. I'm just showing you the what do you call it? The movement of the stock. Holy cow, we're at 11:30. Theo. Oh, the one real green man. I don't understand. Oh, you don't understand. I'm trying to figure this out. Here's an idea. Okay. Let's say, hypothetically, okay, just hypothetically, you got an old car sitting in your backyard. Let's say it's a 76 Cadillac convertible. Ooh, nice car. All right, so you take that car, you push it out into the front lawn, you slap a for sale sign on it, $10,000. Great. Wonderful. Now, let's say the guy down the street comes by and says, ooh, Theo, I like your car. Let me give you this. Hold it for me till Friday. I'll be back on Friday, give you the rest of the money. If he doesn't show up, you keep that money and you sell it to someone else the next week. So, someone comes by next week. Oh, I like your car. Let me give you a couple of bucks. Hold it for me till Friday. If I come back, I'll give you all the money. If not, sell it to someone else the prior week. What we're trying to do is create weekly cash flow. Or here's another way of looking at it. let's say, hypothetically speaking, you buy a vending machine, a candy machine, M&Ms, Mounds, Snickers, Hershey bars, stuff like that. Okay, let's say you pay $10,000 for it, and you put it on the corner of Spring Street and High Street, right downtown, a lot of traffic, and people come by and they feed it, and you come by once a week. Now you dished out 10 grand for the machine, but it pops out 1 or 2% every single week. And at the end of the year, that's over a 50% return, and you still own the machine. So I'm kind of doing the same thing. I'm buying a stock, 8, 10, 15, 20,000 bucks, and every single week it spits out money. What am I looking for? Same thing with the vending machine. A brand new machine is going to cost you, let's say, 20 grand. Okay? A machine that does the exact same thing, but it's a little bit used, well, maybe that might be 15 grand or 10 grand. Okay, now what if you got one that's 10 or 15 years old? Well, then maybe that's only 2 or 3 grand. But they still dish out a certain amount of money every single week. I'm creating weekly cash flowing assets. Okay, I got 2 criteria and only 2. Is the company consistently profitable, and do they have weekly options? That's it. That's the only 2 criteria. Then we take a look at the chart. Is it going up or is it going down? Because it only goes 2 ways. It goes up or goes down. And if you can't tell, next. Don't be so impatient and feeling you have to jump into anything every week, because you don't. Run and cook your hymns explanation. If you sell 17 covered call, if it shoots up to 20, gets called away, won't you be at a loss? Now, run and cook, I'm going to, okay, it's a silly little thing, right? You ready? I'm going to agree with you 100%. You are absolutely 100%, but listen closely. You're 100% in your simplistic point of view, because it is very simplistic point of view. Okay, I'm in at 40, I sell the 17s. If it jumps up to 20, it can be called away from me and I would lose. You're absolutely 100% correct. But here's what you're missing. Okay? What you're missing is it is my responsibility to know exactly where my positions are. Okay? So if I sell at 17, I'm going to look every single day. I'm going to set an alert at 1659 or 1689. And as soon as it hits that number, I will get an email or I will get a text. And if I don't do anything about it, then I deserve to lose. As simple as it can be. You set it up as best you possibly can to not lose. Okay? So yeah, I bought it at 40. I'm selling it at 17. But whoever bought it from me paid 8, because of the example I gave you, they paid 80 cents a share. Okay? So they wouldn't take it from me at 17. They wouldn't take it at 1750. They won't take it at 1760. They won't even take it at 1779. Because break even is 1780. Anything over 1780 is a profit. Well, great. What if it happened 1782? Well, wonderful. You're making 2 cents off of an $18 position. Where's the profit in that? You're going to pay, what is it, commissions and fees? Doesn't make sense. So you have to take a look at the whole example. What did I buy it for? What did I sell? Where's it at now? Where does it look like it's going? What does it mean? What should I do? So the simplistic view that you're saying, okay, sell the 17s, it jumps to 20, they buy, you lose. Yeah, that's right. But you're missing a lot of parts in there. I look twice a day. I look in the morning, what happened? I look in the evening, what happened? I can set an alert. If the stock hits this, let me know. I can set 2 or 3 alerts. If it hits this, let me know. If I ignore that one, well, this one will tell me to look at it again. I can set as many alerts as I want. There are things there set up so that you don't lose money. You just got to know how to throw them all together. It's a very simple strategy. Never buy something you don't want to own. Well, great. Now, I had no idea that Hims were getting into a lawsuit. Nobody did. If we did, we probably wouldn't have done it. But it is what it is. It's down. I'm still bringing in over 1%. I really don't care. But I will look at it and I will set Excuse me. I will set alerts so that I don't lose. Okay, let's keep on going. What stock is this? This is MLI. Jackbox. What if it goes to 1750 and you get called out? Exact same thing I just said. Okay. Now, hold on, I got to do this. Right there. If you have a position, okay, it is your responsibility to keep an eye on it. If it gets to 1750, yeah, I will do something about it. Okay, and no, I would not be called out at 1750 because the break even is 1780. Why would you pay 1780 for something that you can buy for 1750? Think about it. If it's at 1750, would you buy it from me at 1780 or would you buy it from the market maker at 1750? The logic is there, but you're not thinking it all the way through. I'm not trying to insult you or anything, but you have to take a look at the whole picture. Remember, I bought it at 40. I'm selling the 17s. Now, I'm selling the 17s at an 80-cent profit. Okay, so I'm getting that 80 cents. That's more than 2%. Fine. Now, the new break even, you got to remember that. The break even for whoever's at the other end of this equation paid 80 cents a share for the privilege of buying it from me at 17. So their cost is 17.80. Why the hell would anybody pay 17.80 to me when they can pay 17.50 to the market maker? Does that make sense? Do you see how the numbers work? There's a lot more going on than what you think. Just because I'm selling it at 17 doesn't mean you're buying it at 17. Because you already paid in advance for the privilege to buy it at 17. Okay, so your break even would be 17.80. Hims, will you average down, buy more shares? Yes, I will. Eventually. All right, what else do we have? Robert, why did you buy Hims? Only been publicly traded company since 2021. Yeah, Robert, I hear what you're saying. Okay. It's not in my account. It's in one of my clients' accounts. Okay, so I do trade money for other people. Okay, friends and family. So I don't trade for just anybody. Okay, you have to be a friend or a family member. Okay, so legally I'm allowed to do 5 or 6. That's it. I can't do more than 5 or 6. Friends and families. That's it. Rex. He would have to watch it every day and roll it if it gets in the money. You're absolutely correct. Don't make mistakes, but the news ruins it for me. Okay, I don't watch the news. Isn't that weird? I don't watch it. Goodyear. Ooh, I like Goodyear. We'll look at it next time. Jax. Pfizer. We'll look at it next time. Theo. How much does it cost to sell the call and what's the downside of it? Okay, that's a good question, Theo. Okay, to sell a call, you're paying per contract. Okay, and I believe I don't even what the hell. Well, hold on, let's find out. One way to find out is actually to sell one. Let's do one right here. Sell one. Confirm and send. Right there, it's $6.50. And okay, it's 65 cents per share per contract. Okay, 65 cents per contract. 10 contracts is $6.50, and then the fee is 14 cents. So it's a whopping $6.64 to sell 10 contracts. So each contract is 65 cents to sell one. That's the commission and fees. So that you always have to pay. All right. What do we got next? Sam, BTU, next time. Jax, Green Man, the downside is your profit potential gets capped. Exactly. Your profit potential is capped. I mean, I'm only looking for 1%, so me personally, I don't care. So stock could jump through the roof, and what would I get? I get my 1 or 2%. Somebody else gets the rest. Share the profits. Don't be greedy. What's the best outcome? The best outcome is to get a consistent 1% every single week. I mean, think about it. You buy a good company, like let's say AT&T. You buy AT&T and you get 1% every single week. That's a 50% return. Jax, yeah, read the book Wall Street Money Machine by. I like that book. It was a good book. Best out. Yep, I just said the same thing. See, he said the same thing. 1% a week, 52% a year. But it's kind of risk-free. Kinda. Everything is kind of risk-free. If you're not paying attention, it could slip by you and you could lose money if you're not paying attention. Jax, it's not risk-free. You still lose. The stock drops more than what you sell the call option for. Okay, Jax, I'm going to disagree with you. Okay? You never lose until you agree to sell it for less than what you paid for it. I don't know why I have to repeat that over and over again. Okay? If I bought, well, I did. I bought HIMS at 40, and now it's at 15. Did I lose? No, I didn't lose. If I sell it or let it get sold for less than 40, yeah, then I lose. But that would be me agreeing to let it go for less than what I paid for it. And that ain't going to happen. Okay, I look at it every day, and I will set an alert. Because when she bounces back up, I want to make sure I'm on the right side. But no, Jack, it is risk-free until you make a mistake. But you can sell another option the following week. Absolutely. What does it cost to sell an option? We already talked about that one. Depends on your broker. There's only one part of his strategy I don't agree with. What's that, Jax? Greenman, I've been trading for over 40 years. I can teach you anything. Thanks, Jax, but you didn't tell me what the issue you're having. Starting a trading channel. Way to go. Jack, are there any rules around buying back a contract? What if the other person doesn't want to sell it back to you? All right, see, you're under the misconception that you have a choice. You don't. If you want to buy it back, you buy it back. You're not buying it from a person. You're buying it and selling it to the market maker. You can't sell me an option, and I can't sell you an option. You got to go through the market maker. That's like when you want to buy a gallon of milk. You can't go to the farmer to buy a gallon of milk. You got to go to the store, to the middleman. Because the middleman, let's think of it this way. You got a 7-Eleven, Quick Stop, Quickie Mart, Circle K, whatever. Okay? Corner store right around the corner. You go to the corner store and you buy a gallon of milk for $3.50 a gallon. What does the owner pay? He pays about $3 a gallon. What is his profit? About 50 cents per gallon. That's it. Okay, you cannot go around it. If it is listed for sale, it's listed for sale. You can't, if you want to buy it back, you just buy it back from the market maker. You don't have to go to the person who bought it from the market maker. You have no idea who bought your shares. You have no idea who you're buying them from. You don't. The market maker is the only person you can buy and sell to. That's it. Jax, I've considered it, but I'm very sensitive and compassionate, and I wouldn't feel good if I steered someone the wrong direction. Okay. If HIMS gaps up significantly above 17, you will be called for the realized loss or be forced to buy the call to close at a loss. Robert, I'm going to kind of agree with you. Okay, kind of. You're kind of right. If it gaps up, I would be at risk of losing out. But if it gaps up, it's going to go right by my alert, and I will get my alert. Now, could somebody sell it or buy it within the time that it gaps up? Yeah, that's the risk. Could it do that? Yes, it could. That's the risk. It could jump up. It could gap up. That's why I look the first hour every day. I jump on at 9 o'clock in the morning, and I'm usually off by 10:30 or 11. Because I want to know exactly what are my positions doing? Am I winning? Am I losing? Am I profiting? Am I at risk? It's not a difficult question. Okay, 9 a.m. We had a morning trading group. There's about 30 or 40 people show up every day. And you watch me do 3 different accounts. After I do my 3 different accounts, you just ask questions. Hey, James, why did you do that? James, can you look at mine? This is doing this. What should I do? And then we take a look at it from all different angles. Well, if this happens, this could happen. If this happens, this could happen. But ultimately, you got to choose. So if I'm looking at the stock first thing in the morning and it gaps up, well, I'm there anyway. So I'm looking at it. Sometimes it could go by you. You might not see it. But if you're looking at your account every morning or every day, you will notice, okay? You will notice this right here. Okay? Let me blow that up so you can see it better. All right, I'm going to blow it up so you can get a better view at it, so you have a good idea what I'm talking about. There it is, right there. All right? If you're looking at your account in the morning, this is what you look for. ITM. That means there's a risk that I could lose. It is in the money. ITM, ITM. Those I want to pay attention to. I want to open it up. What did I buy it for? What did I sell? Where's it at now? What does it mean? That's it. All right. Hopefully that makes sense. What other questions do we got? Jack, it's not that literal. The broker handles that. I'm aware of that. The broker handles it through the market maker. Okay? You cannot buy from me. You cannot buy from Jack. You cannot buy from Ted. You cannot buy from Jill. You cannot buy from anyone but the market maker. And yes, the broker does handle that for you through the market maker. You would be buying back from a different person. Probably, but it doesn't really matter. Where are you from? The Boston area. What part of his strategy don't you agree with? I'd like to know what part he doesn't agree with also. You deserve hearts and likes and a subscribers. Sorry, but I was never notified. Face out of space. How's it going? Jax. He's not afraid to buy stocks at 52-week highs. No. I don't buy at the 52-week high. I don't do that. Hold on. Hims, is there a chance for bankruptcy because of the lawsuit? See, I don't know if it is, but sit tight. We'll work with it. The buy stocks at 52-week highs, it sounds like for sure at all-time highs, but I feel buying stocks hitting new highs is safer than stocks hitting new lows. I have no idea where the hell you came up with that idea. Think about it. Does that make sense? Seriously, think about it. An all-time high was a stock price the stock has never, ever been to before. Blazing new territories. Look boldly going where no stock has gone before. And you actually think that's safe? Could be. I don't know. I don't buy at the high and I don't buy at the low. Sorry. Could work for you. Not something I would do. I don't buy at the high. It doesn't make any sense. Maybe because he doesn't want to hold the stock, he seems to feel that he can pick stocks that will rise by Friday. Well, I've been doing it for more than 15 years, and I'm pretty much okay with what I'm doing. Also, he's afraid to sell for a loss. Refuse to. What about the tax benefit? Jax, only if you like paying taxes. Think of it this way, Jax, all right? My trading account is in a corporate account, which means I'm taxed at a corporate level, which is a lot less than a personal level. Now, back it up for a second. Any profits made on a corporate level can be offset by losses of the corporation, such as life insurance for the corporate officers. That's a tax deduction. Corporate meetings. Okay, the board decides where they're going to meet and where they're going to go. Well, let's say hypothetically we have a corporate meeting in Hawaii. Perfectly legal because the corporation decided where we're going to have our quarterly meeting. Well, I think we'll have it in Hawaii this year. Great. We fly everyone to Hawaii. It's a business expense, a business loss, offsetting the profits from the business structure. I can go on all day long. It is your personal responsibility to lower your taxes or eliminate them totally. And you can do it legally. Any profits from a profitable endeavor can be offset by losses of that same endeavor. So if the corporation bought a brand new corporate vehicle, it now has to pay insurance and maintenance on a brand new vehicle. Well, who gets to use that brand new vehicle? I do. Didn't come out of my pocket. It came out of the profits of the corporation, which is a tax write-off. So don't get me on that tax benefit crap. I don't pay taxes because I don't want to pay taxes. Okay? I have my account set up in a certain way where I can legally not have to pay taxes. He doesn't care about that, just wants to 1% a week. It sounds good in theory. You're absolutely right. It sounds good in theory. In theory, for you. But it's actual reality for me. Now, if you don't, you believe me or not, if you don't want to, wait a second, I want to show you something. You'll like this. La, 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 la. All right. Okay. Back to the 10-minute trader. Here we go. Right there. What I'm going to show you, you're going to like this. Are you ready, Jax? Watch this. We're going to go to the hamburger in the top left corner. We're going to go to Weekly Trades 2024. When we get to Weekly Trades 2024, we're going all the way down to the bottom. Okay? All the way down to the bottom. And there's a reason why we're going to the bottom. Okay? Here's why we're going to the bottom. You ready for this, Jax? Check this out. Okay? You might not be able to see it really good because it's a white screen. But starting date. Do you see the starting date right there? August 31st, 2011. I've been doing this, sharing all my trades since 2011. Each week, I would isolate every single trade I made. The winners and the losers. Yes, I share my losers also because I do lose once in a while. Okay? July 2013. Look at down here. All these ones. We can click on any one of them. What's this one? 9/28. What year is that? 2011. Okay? I've been doing this for a very long time. Pick a good company. Make sure it's going up before you jump in. Do a safe, predictable trade. 1% a week is really not that much. And it's easy to do. But if you take a look at the rates of return. Week 1, quarter 1, January 1st to January 5th, 2024, 2.39, 2.1. Let's go up a little bit. Week 2, January, 2.4, 1.3, 1.3, 0.8. Oh my goodness, I didn't do 1% that week. I'm terribly sorry. I did 0.81. Instead of making $1,000 that week, I made $986. Boo-hoo for me. Okay? I didn't say I get 1% every single week. I said I average 1.4% every week. Okay, what's next? Look at this. 0.85, 2.8. 1.6, 1.03, 2.7, 1.05, 2.6, 1.8, 1.7, 1.9, 2.2, 4.2. You can take a look at every single trade that I've done for the past, 2011, 15 years, 16 years, something like that. For the most part, I make over 1% a week. For the most part. Whether you agree or not is really irrelevant to me. I'm going to be doing the same thing. I've been doing it since 2011. That's the first time I did, what do you call those stupid things? Blog post. Blog post and video. This is video. This one is 11 years ago. Holy cow. Look at this, 5 computer screens. That's nuts. 1, 2, 3, 4, 5. That's, what is that, 11 years ago? Anyway, that being said, I've been doing this for a long while. What other questions do we have? Let's get out of there. What stock to buy now? Theo, I couldn't tell you that. I know nothing about you and I don't give tips. I give opinions and I take a look. To buy with what goal? Good question. I think Pfizer might fit. Yeah, Pfizer does fit my criteria. It's on my list. What else do we got? To buy with a 5-year hold, I'm accumulating Riven on dips. Nice going, Jax. I wouldn't do Riven. Not consistently profitable, and they're not 20 years old. But, hey, you can't get to 20 without going through 5 and 10, right? Theo, buying at the bottom and selling for long holds and quick gains. Always different. Green Man, what state do you live in? Okay. Riven might be good, but there's too much vehicle competition. Okay. I don't do Riven because they have not been around for 20 years. Sorry. General Motors and Ford have been around for over 100 years. Hey, James, how did you handle the buy button disappearing 5 years ago? Dude, terribly sorry, man. I live in the present and I look forward to the future. I very rarely look backwards. There's nothing I can do about what happened 5 years ago. So looking at it and trying to figure out, no, sorry. Pat agrees with me. Thank you there, Mr. Pat. Jax, but it's very early in the game and there are demonstrating strong leadership. Okay, you can argue all you want for your point of view, and you're absolutely 100% correct. See, I'm agreeing with you. I'm also going to add that while I'm agreeing with you, I'm still not going to do it because it doesn't have 2 decades of profits. I don't care how good it looks. You got to remember, I'm retired. I have no desire whatsoever to go back to work. So every trade I make has to make sense and has to be right. And I don't do projections and I don't do hypotheticals. Okay, it's either 20 years old with 20 years of profits or it's not. Plain and simple. Okay, there's 10,900 different companies to choose from. Why the hell would I pick one that doesn't fit? That's all I'm saying. Okay, I like 300 companies because they all fit. When you say you lost on 4 trades last year, does that mean you sold at a loss? That's exactly what it means. Think about it. 3,500 trades, give or take, and I lost 4. That's it. That's pretty damn good if you ask me. Adam, we'll take a look at that one next time. I'm just finishing up questions. Joey Joe. Currently have $35,000 in credit card debt, but have money about $9,000 in check account. Okay. Is now a good time to buy a $6,500 Rolex on Marketplace? Dude, I can't give you advice on that one. That just sounds crazy from all different directions. $35,000 in credit card debt and you want to buy a $6,500 Rolex? What the hell for? You can go to the flea market and get a watch for $1. It's going to do the exact same thing. It's going to tell you the time. You want to buy the Rolex? Buy the Rolex. You go around once. You want to have it? What good is it? I'm not even, no, sorry. I don't wear any jewelry. Let's go to the next one. It's half the retail price, thinking of flipping it. Well, go ahead and flip it. Profits are better than wages. How's that one, Joey Joe? Profits are better than wages. If you can buy it and you can turn around and resell it for a profit, it makes sense. Other than that, it doesn't make sense. To open a pet salon. Oh my goodness. If stocks have low volume, the spread in the bid and ask option will hurt you. You're absolutely right. Why would you bother buy? Why would you? Oh. I think common sense is really not that common. Why would you buy a stock with low volume? And stocks only have low volume if they're not that good of a stock. The stocks I'm talking about, almost every stock on the Dividend Kings, Dividend Aristocrats, Dividend Champions has over 1 million shares trading every single day. Almost every single one. So it's not something that I worry about. But you're right. Low volume stocks have a big bid-ask spread. But you're right. I'm agreeing. See, I'm agreeing with you. I'm just saying the stocks you're looking at with low volume is stuff that I wouldn't even bother looking at. So it doesn't affect me. Joey, that sounds crazy, but I admire your ambition. The only way to succeed is through failure. If you don't give up, you will never eventually succeed. I'm going to agree with him 100% too. Okay? I do. I agree 100%. Okay? No risk, no reward. Joey Joe, I like ConocoPhillips, so do I, more than ExxonMobil. Well, I like both of them because both of them are consistently profitable, and both of them have many. Why did that just turn off? Oh, no activity, that's why. All right, anyway. Vigilante, does your strategy outperform bonds during a bear market? Okay, I've never, ever seen a bond that offer more than 20%, unless it was a junk bond. And those I don't do. I just don't do bonds because they don't give weekly cash flow. No. Today was a nice pullback. Thank you, Mr. Bell. All right. I am thinking of shorting Exxon tomorrow, coincidentally. All right, Jax, thank you. I hold some ConocoPhillips and diverse fleet of oil tankers. All right. Tankers tend to pay pretty good divs. Okay. Hey, Chandler. How you doing, Chandler? Hope everything's good for you. LUMN next time. Free to sell based on fee depending on the platform. A call downsize is capital gains. I'm not 100% sure why you're saying this. It's got nothing to do with what we're talking about, but all right. Not always. Webull doesn't charge a commission. Yes, they do. They all do. Where are you reading comments from? I'm reading your comment asking me where am I reading comments from. That's the silliest thing I've ever seen. Not realize it. Yeah, I see that. Legging out is not an issue. Okay. What platform are these comments on? You know, the funny thing is I'm reading the comments that you're writing and you're asking me where whatever. Robert, major risk would be a gap up, absolutely, on the opening, correct. Otherwise, alerts would be a great help. You're absolutely correct. Here's the thing. If I'm online already at 9 a.m. just before the market opens, don't you think, hypothetically speaking, I would know when the stock is going, if the stock jumps up? And if the stock jumps up, well, someone has to be right there at that moment to put in an order. But you're right, there's a possibility with a gap up. Oh, you're just catching up. Yep. Those comments are super old. Dude, I'm terribly sorry. Okay, I have 9 cameras. Oh, 8 cameras now because 3 of them turned off. Because I'm past 11 o'clock. Holy shit, I'm past 12 o'clock. You're like 30 minutes behind. Terribly sorry, dude. Look at the time I sent in relation to when you're reading. Why they don't click makes sense. All right, I can help. Listen closely, all right? I am live streaming on 9 different platforms. That means I have 1, 2, 3, 4, 5, 6, 7 cameras going right now, not including the one down here. That means I have 1 screen full of questions, 2 screens full of questions, 3 screens full of questions. That one I finished all those. That one turned off, and over there, more questions. You're not the only dancer on the dance floor. So I get to answer questions as best I possibly can. All right? I'll get to them eventually. I just can't get to all of them as soon as they're put in. Nemo, you're welcome. Currently 12:02 a.m. Nope, it's actually 12:03 a.m. Because he streams on many platforms and answers a string of questions before moving to the next, so they are behind. Yep. No problem. I was wondering what you were reading from because I didn't see. Okay, makes sense. 100%. I understand. Reason I didn't understand. Okay. Can you go over the best year since 2011 with highest gains? No. Wasn't that quick? You asked a question, I gave an answer. Do you know why I'm saying no? My kids hate this. Everybody hates this about me. I don't look backwards. There's nothing I can learn about what happened 5, 10, 15 years ago that I haven't already learned because I lived through it. Okay, how many times do I need to get kicked in the shin to feel that pain? Okay, why do I want to think about it over and over and over again? Not to do it again? Well, I already know not to do it over again. So, unfortunately, no, I couldn't tell you. I can tell you what I did last year. I think I did 68% last year. That's pretty good overall. Okay, 68% is not bad for 1 year. But I don't remember the year before, because it doesn't mean anything to me. It's written down somewhere, so I don't need to help. Don't need to keep rehashing it over and over again. Hymns earnings coming up, and at the 52-week low, I paced an order for 100. Okay, there's nothing wrong with that at all. Okay, I wouldn't see. I'm going to dollar cost average on hymns when it stops dropping. I'm not going to jump in now. I'm going to wait for it to stop dropping before I dollar cost average. And Bocce's on the phone, so that means I'm out of here. You guys have a great night. Bocce!
Hey, are you done with your video?
I just finished up now, and I'm just turning everything off. What's up?
Okay, you